Equity trading and fronting like one London, and he's back with Tom McKenzie.
And here are your top stories. Chinese manufacturing activity rises by the most in over a decade, propelling a rally in stocks and commodities. Europe is set to open higher. Gloom at Goldman. The company shares fall as CEO David Solomon tries to persuade investors the bank has a ready solution for its troubled consumer unit. Plus, results are in for Nigeria. The ruling party's Bola Tinubu is declared winner in the presidential election amid opposition protests.
Tom, if you look at the futures, as you were mentioning, a bit of optimism on the back of encouraging data from China. And then, of course, we look at the National People's Congress next week. But for the moment, the FTSE holding on to gains 0.3% higher for the future. So let's see what the rest of the day brings.
The China catalyst has been real, particularly in the Asian session. You've seen that filtering through, particularly in Hong Kong. And we'll touch on that shortly. But the rally in Hong Kong has been intense. You've seen gains of a little over 1% on the mainland as well. So the filter through to the European markets on the back of that. Worth noting as well that housing sales in China jumping and rising for the first time in about 20 months. Don't forget that real estate makes up about 20% of the GDP of China when you add in all the ancillary parts of that economy. Currently, you're looking at gains of 0.2% in Spain across the Spanish IBEX. The FTSE 100 up 0.2%. Some data again coming through, just pointing to the pain for consumers here in terms of shop price inflation at record highs in the UK. 8.4% was the jump there, the highest level since 2005. Let's have a look cross asset then. We'll check in on that China push across the Hong Kong sector, particularly with the tech-heavy HS Tech Index. Gains there of almost 7%. So the reopening trade back in focus when it comes to China. Future stateside pointing to modest gains of 0.2%. Euro dollar 106. The dollar is under pressure. Euro is gaining 0.6%. Brent is up on the back of the China story as well, as is iron ore, as is copper. The commodity space getting a significant lift. $83 a barrel on Brent, gains of 0.5%. Fran.
Yeah, one of the things that's really interesting, Tom, today is that we have great analysis and looking at charts on how much some of the sectors gave back, what it means going forward, and what it means for margins. Now, out of the 20 groups that make up the Stock 600, I have about half in the green. Basic resources leading the gains 2% higher. I have auto parts, technology, and consumer prices, actually consumer goods on the way up, and then real estate down 1%, utilities also down some 0.6%, Tom.
Okay, let's get the details then on this factory data. In the world's second largest economy, of course, China, surging the most in a decade, as we said, beating those analyst expectations. China's official manufacturing PMI came in at 52.6 for the month of February, well above the estimate of 50.6, and of course significantly in contractionary territory. Let's get more then from Bloomberg's chief China markets correspondent, Sophia Horta y Costa. Sophia, what is the strong recovery in manufacturing telling us then about the state of the economic rebound? Investors, particularly in Hong Kong, loving this data.
Yeah, really loving it. Also because, Tom, it's really the first kind of clean set of data that we get in the post-COVID story, because obviously we had that first initial reopening wave and also the Lunar New Year, which really kind of disrupted things. So the fact that this is a clean set of data and really showing that the economic recovery is a lot better than the street expected, really giving the market that catalyst it needed. Tom, yesterday the reopening trade was dead, and today it's very much back on. That's being played importantly mostly in Hong Kong. I mean, Alibaba was oversold just yesterday, right? And really kind of those flows coming back in. Hang Seng Tech Index up more than 7%, you said. But Tom, looking ahead, I mean, the Hong Kong versus onshore market story, that's really, really interesting, because if you want to play reopening, you play it in Hong Kong. If you want to play stimulus, you play it onshore. So look at how those markets are faring, and you'll know which story is dominating right now.
Yeah, and it's very clear. Sophia, good morning. So what are markets expecting from the National People's Congress that meets from next week? What does it mean for growth forecasts?
That's a really good question, Fran. And really, I mean, the growth expectation, this really sets us up for a good GDP target. If we do get one, we don't know if we will. The street is really upgrading a GDP forecast for this year, most of it above 5% now. But really, any indication of stimulus measures, that may be dialed down. And those expectations, let's see tomorrow how the market performs, because, you know, today good news is good news. Let's see if good news is bad news tomorrow. The expectation that we would get more policy support is in particular for the property market. As Tom said, home sales are now back up. So will Beijing feel the need to roll that out? Also, another question would be when it comes to fiscal stimulus, whether the central government will spend more and really kind of get those tax breaks in. Lots to watch out for in the markets. But today, it's a very, very optimistic day here in Hong Kong.
Thank you so much, our Bloomberg Chief China Markets Correspondent, Sophia Orta-Acosta. So we'll have plenty more, of course, on China. Joining us also, Charlotte Ryland, Co-Head of Investments at CCLA Investment Management. Charlotte, thank you for joining us. China's on a tear right now. It's the first clean set of data that we have. What does it mean for how we should look at, you know, all energy sectors, all commodities because of China's reopening?
Yeah, I mean, I think clearly, you know, China being back on the world stage, the Chinese travelling again, the Chinese manufacturing, as they have done, that will be helpful to the commodity picture. But I certainly don't think we're, you know, on the cusp of another commodity super cycle, and there's no evidence that, you know, the Chinese are going to be rushing out on a huge infrastructure boom spending as they have done in all previous recessions. So I think, you know, a little bit of support there perhaps for the oil price, but I think that's probably reflected in a lot of the moves that we had last year anyway.
Because Charlotte, that was going to bring me to your call that inflation is going to see a rapid drop this year. And I just wonder then if China challenges that view, given what we're seeing in terms of the prices around iron ore, copper and oil today on the back of this. Is that a challenge to that view? How can you be so convinced about the trajectory, the downward trajectory of inflation given China?
Yeah, I mean, I think, you know, what have you got playing in there? You've got, one is sort of the base effects you're comparing sort of different periods and time, and therefore you would expect that to come off. Secondly, you know, supply chains are now back open. Clearly, if China's manufacturing again, those supply bottlenecks are beginning to ease. And thirdly is, you know, you've had that huge boom in goods demand in the pandemic, which is definitely beginning to ease. So yes, services side of things probably a little bit more sticky, but you know, we would certainly expect, you know, there's all 8, 9, 10% that we've been seeing recently would begin to ease off, but certainly not the inflation completely disappears.
So where do you put your money right now?
Yeah, I mean, it's been a very schizophrenic start to the year, hasn't it? I mean, there's huge rally in January, followed by then, you know, much more pessimistic outlook, particularly on inflation as we've moved into February. I mean, I think for us, you know, we've been looking at some of the things which have fallen back in terms of valuation. So maybe some of the things in the tech sector, things like ServiceNows or the Intuitive Surgicals and the healthcare industry, which have really pulled back in terms of their valuation. It's also to think about some of the longer term trends out there, things like automation, things like the move to sort of greener energy, you know, so companies that can play on that, benefit from that theme. And equally, you know, China will be a factor this year, particularly the Chinese consumer. So companies that play into that, things like Estee Lauders, the Nikes of this world, probably will do reasonably well.
So you want, on the China trade, you want exposure to those European companies that have that footprint and that buy and those sales in China, rather than direct exposure to China. Is that still the way you want to be approaching it?
Yeah, I think so. I mean, that certainly has been the success in the past. I mean, those are the companies with the really strong brands, the really strong margins, you know, very strong footprint in those markets. You know, as China consumer premiumizes, you know, companies like the Hermeses and the LVMHs of this world will do well.
So is there anything that you'd be selling right now, Charlotte, given, I mean, inflation came in hot, much hotter than expected in Europe. That's likely to accelerate if China's doing so well.
You know, I think, you know, we're going to have to continue to be careful in terms of margins this year. We're certainly seeing that earnings are more difficult, even if we're not in a recession, which of course is what everybody was expecting last year. And I think also you need to, you know, keep an eye on valuations, because that is what's going to be an issue for markets. So, where you have got companies that moved on to extend margins, be careful of those. Perhaps in some of the more defensive areas of the market, things like the pharmaceuticals, some of the consumer staples could have a more challenging year, haven't been great last year.
How bold is that call from you on tech? Because I saw that in your notes. The FANGs are looking a little bit more attractive. The cost structure is looking a little bit more compelling. It's a bold call, isn't it, in this environment of continuing higher rates?
I mean, I think it depends which one you're talking about. I
Okay.
mean, would I say that, I think the FANGs are going to be the place to be in the way that they have been? I suspect not. But I think some of them are looking more attractive. I mean, things like the Microsoft, for example. Yes, they're seeing a bit of a slowdown in some of their cloud spending, but yes, they've also countered that with some cost cutting. And I think that cloud trend over the long term continues to be pretty attractive.
Charlotte, what do you do with assets here in the UK? So we have a Brexit deal. Let's see if that gets passed through. But does it change the long-term prosperity of the UK and attractiveness?
I mean, I think it's good that we've now got a more constructive dialogue going on between the UK government and Europe. Certainly that's what's come out of the Northern Ireland deal that we've seen. Is Northern Ireland in itself a game changer? Not really. I think there are still big challenges for the UK in terms of no longer being part of the single market. The bureaucracy, the trade barriers that are now in place are definitely a challenge for them. And that will continue to be the case. And the UK consumer is continuing to struggle. Sort of the inflation figures that we've been seeing today continues to sort of point to that more difficult position for the UK consumer.
Yeah, record increase in terms of the prices. The jump 8.4% in terms of shop prices here in the UK. Charlotte Ryan, I'm very pleased to say, is going to stay with us. We'll get more from Charlotte in terms of her calls, positioning. Co-head of investments at CCLA Investment Management. Coming up, the ECB kicking off a passive tightening cycle after 8 years of easing. That is today. We're going to check on the market reaction to that and get the details from Valerie Teitel. Stay with us. This is Bloomberg.
So Fabian, talk to me a little bit about the ocean. It covers 70% of the planet. It gives us food, it gives us jobs, it gives us, of course, oxygen. We're taking too many fish out, we're polluting it, we're making it warmer, and only 3% of it is protected. What frustrates you the most about this?
The basic frustration is our ignorance about how integral ocean is to not only our well-being, but to our existence. And for far too long, we've been using the ocean as an endless resource in a garbage can. Imagine our planet is a three-dimensional system. The ocean represents 99% of our world's living space, about 3.4 billion cubic kilometers of volume, within which the vast majority of biodiversity lives and thrives. And that's what we're beholden to. That is what makes us possible as a species.
How did Jeff Bezos realize you could sell anything on the internet?
The web was growing at something like 2,300% a year. Anything growing that fast is gonna be big.
Why did Bill Gates create Control-Alt-Delete?
Kind of become the poster child of, hey, couldn't you have made this stuff a little simpler?
And what inspired Diane von Furstenberg to create the wrap dress?
The wrap dress created me.
On the David Rubenstein Show, I uncover the untold stories of the world's most successful leaders, right here on Bloomberg.
Welcome back to the Open. We are 12 minutes into the European trading day this Wednesday. Gains of 0.2% across the European benchmark. 0.4% is the gain that you're seeing on the FTSE 100, 7,910, adding 34 points. Futures in the US also pointing higher, between 0.2 and 0.3%. Top of the list for your sectors, technology gaining a full 1%. Real estate, though, at the bottom of the list, a loss there of 1.6%. Yields also higher this morning, Fran.
Now let's get over to our markets reporter, Valerie Teitel. Valerie, good morning. You're looking at ECB beginning QT, and we've also had a number of banks actually upping or raising their forecast for peak interest rates.
Yeah, the ECB's balance sheet runoff begins today. It caps an 8-year experiment with quantitative easing, which has seen the European balance sheet balloon to 9 trillion euros, 5 trillion euros of which is European government bonds. Now, the big thing about this is we know these inflation prints in Europe are starting to come in hot. Will the ECB look to ramp up this pace of QT as a mechanism in which to tighten monetary conditions here in the Eurozone? And the second question is, now that the ECB is stepping back as a buyer of European government bonds, are the yields juicy enough for foreign investors to return? Now, the net supply that is going to be issued here in Europe in 2023 is massive. 600 billion euros, the effective net debt supply that we're estimating for 2023. It is double 2022's number. So Europe really needs to see some incremental foreign buyers to come step in. The question is, are the yields juicy enough for them to return given the hot inflation prints we're seeing?
Okay, Valerie Teitel, thank you very much indeed. An important day, of course, for the ECB with the start of that, at least modest QT, as Valerie is saying, and whether or not the ECB steps that up in light of the environment that we're currently in. Let's bring back Charlotte Ryland now, co-head of investments at CCLA Investment Management. Charlotte, your view then more broadly, and you were talking about some of the specific names and sectors that you liked within European equities. I wonder about the vulnerability of European equities as we consider a terminal rate from the ECB of around 4%, possibly, and quantitative tightening. What is the vulnerability? Which sectors are potentially at risk in a higher rate environment?
You know, it's going to be sort of the fairly obvious places where, you know, things like utilities, real estate, which are the most sensitive to discount rates. It's clearly been anybody who's got a more stretched balance sheet is going to struggle with the rise in borrowing costs. You know, to an extent, the banks are going to be a beneficiary, and they've obviously rallied already the last few months from the expectation of higher rates. But of course, there's always a tipping point with that, you know, because if credit cycle begins to turn, we begin to see distress from their borrowers, you know, that won't be a great environment for the banks.
So, Charlotte, what does that mean? Do you buy selective banks, or do you just stay away from the industry?
I mean, for us, we would say that, you know, the European banking sector is not a terribly attractive one in any case. It's not been one that's been showing particularly, you know, strong earnings growth. We tend to prefer, you know, possibly, you know, some of the banks in sort of emerging markets. Some of the Indian banks, for example, would look like a much longer-term growth story versus the European banks. And they've also clearly moved off from, you know, very low valuation levels to somewhat more pricing in the slightly better environment that they're in.
Indian banks versus European banks. That's an interesting, interesting call. I'm going to leave that sitting there. But I want to stay in the banking space and energy as well, because when it comes to the momentum generated by buybacks, and Bloomberg Intelligence has been looking through the numbers, about $70 billion worth of buybacks, particularly from those two sectors across European equities. Does that momentum continue? Is that remaining a foundation for some of the pricing that we're seeing in the months ahead?
Yeah, I mean, it's clearly supportive when companies have that cash flow in order to put that to work. I mean, it's obviously better, for, I suppose, for the longer term of the economy if they're actually investing that into their business.
I mean, do you think we're at peak buyback now?
You know, I think our expectation is that we are in a more difficult period for earnings for this year, and therefore you would expect, you know, there to be something of a pressure on that as a positive.
But Charlotte, is there a worry that actually, because there's so much focus on dividends and share buyback, that we're going to be underinvested, a little bit like what happened in the energy complex 10 years ago?
Yeah, I mean, I think, you know, if you incentivize your management team to, you know, really focus on those kind of very short-term issues in terms of driving up the buybacks, and that's obviously not great for the longer-term growth of your business. So you want to always have that mix coming through there in the businesses.
How is EM looking? So you touched on Indian banks. What is the EM prospect for you at this point? They're ahead of the curve, many of these European, or many of these emerging markets, I should say, in terms of the rate hiking cycle. Does that give them some shelter? Do you like the catalyst that's coming through from China?
I think it depends very much on which emerging market you're talking about. So, I mean, clearly, if you're seeing China reopening and there are countries which are linked into that manufacturing chain and that consumption chain, they would look better placed. But if you are somebody who is, you know, a buyer of commodities, or, you know, some of the markets which have got themselves very indebted, you know, probably not looking quite so attractive.
So are there emerging markets where you're happy to put your money in? Also, I guess as dollar dynamics are changing.
Yeah, I mean, I think you know, India, for example, looks reasonably interesting as a long-term play. But, and then China, we would tend, as I say, to play that indirectly through sort of European or US companies playing into that market rather than directly.
All right, Charlotte, thanks so much. Charlotte Ryland, co-head of investments at CCLA Investment Management. Now let's get straight to the Bloomberg Business Flash. Here's Laura Wright. Hi, Laura.
Hi, Francine. Goldman Sachs shares tumbled yesterday after it hinted at further dismantling of its consumer business. Executives signaled the bank is weighing a potential sale of part of the unit, which has lost nearly $6 billion since being set up. At an investor day, Goldman said it will take another 2 years for the division to break even. That's as the bank offered an upbeat outlook for its wealth and asset management units. A European Union plan to phase out combustion engine cars is being opposed by Germany and Italy. The deal requiring car makers to reach net zero emissions by 2035 was provisionally agreed by member states last year. But Germany's transport minister says he's working to allow vehicles with combustion engines to continue getting licenses beyond the deadline. Poland and Hungary are also against the EU's plan. Mexico's president has announced that Tesla will build a new plant in the northern state of Monterrey. Andrés Manuel López Obrador says Tesla's CEO Elon Musk has given environmental assurances, including the use of recycled water. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Laura Wright. This is Bloomberg. Tom, Francine.
All right, here in London. Thank you very much indeed. Let's check in on some of these corporate movers then. Earnings still coming through, of course. You've got the China overlay as well. All funds, wow, look at that, a drop of a little over 13%. A bit of a mixed picture when it comes to the earnings of all funds. Let me just get the details for you. Reported results and gave an outlook that Citi called mixed. The focus remaining solidly on last week's takeover offer from Euronext. So Citi analyst Andrew Coombs saying the outlook is mixed for all funds, certainly taking a big hit in the session today. Persimmon, of course, the home builder, also down significantly, down 7%. This, again, on the back of some earnings that come through. But they are seeing tentative signs of recovery in the UK property market. Home sales edging high in the first few weeks of 2023. But, of course, they are facing up to an environment of higher mortgage rates and a consumer and households under pressure here in the UK, down 7.3%. I'm not sure if you're a Moncler fan, Francine, but that stock is having a very different day.
Yeah, so Moncler up 7%. So they came out with results yesterday after the market closed, and they really beat almost on all metrics in terms of revenue. It's amazing to see growth of 20% year on year. And then if you break it down region by region, Asia did particularly well, up 15%. What I find amazing actually with Moncler is that they sell puffer jackets, but they've managed to do a lot of collaborations with, for example, rap stars, and that's why a lot of their, like higher-end puffer jackets are really flying off the shelf.
Okay, keeping chic there.
Keeping it fresh.
Keeping it fresh at Moncler, Fran.
Now, coming up, U.S. firms could be ready to pour billions in Northern Ireland, and after Rishi Sunak's new post-Brexit deal, we'll get the details next, and this is Bloomberg.
CIO Dawn Fitzpatrick are the exception in finance, not the rule. Morningstar has taken an in-depth look at women in the industry, and the numbers are startling. The firm found that in 2020, women made up 14% of global fund managers. That's largely unchanged from the year 2000. Morningstar also calculated that while the number of women at the top of the corporate ladder has increased, it won't be until 2060 that women will reach parity with men in the C-suite. Studies have shown that increasing the number of women managers leads to better decision-making and moderates overconfidence. European Central Bank President Christine Lagarde insists that male domination of the banking industry made the 2008 collapse of Lehman Brothers more likely. As Lagarde put it, if it had been Lehman sisters rather than Lehman Brothers, the world might well look a lot different today.
moment moment news breaks, no one covers the world like Bloomberg.
6 people have died from these latest quakes, adding to the 41,000 plus people who've died in those major quakes 2 weeks ago.
A top Sam Bankman-Fried associate said to be nearing a plea deal.
How does that help build the case for the prosecutors against Sam Bankman-Fried?
Biden is here to say we will stay with Ukraine until the very end, and that's really a show of support as well for the allies.
Bloomberg, your global business authority. Information you want, analysis you trust. Everything you need to get set for the start of U.S. trading. Watch Bloomberg The Open with Jonathan Ferro. Weekdays on Bloomberg. Earnings season continues.
The chips are down.
Earnings coming in fast and thick.
A slew of bank earnings this morning.
Bloomberg breaks the numbers first.
Numbers coming through from Shell.
LVMH numbers are hitting the tape right now.
We had a very good set of numbers in the fourth quarter.
Feel confident with the guidance we've given.
The situation has changed completely.
With exclusive expert analysis.
Europe's most valuable company.
Trending towards the higher end of its historical range.
That can continue. How do I play this into 2023?
Bloomberg Television and Radio. The fastest numbers and analysis you trust.
Welcome back to the Open. We are 23, almost 24 minutes into European trading day. The China catalyst coming through for these European markets. Gains of 0.2%. Manufacturing data coming out of China much stronger than had expected, up to the highest levels, the biggest print that we've seen in about a decade out of China. Housing sales is also picking up for the first time in about 20 months. Futures up in the US, 0.2%. The FTSE 100 gaining about 44 points. Yields up, commodities up. The dollar is down this morning.
Now, U.S. businesses could invest billions of dollars into Northern Ireland if the Windsor deal on post-Brexit trading arrangements leads to political stability in the region. The Prime Minister, Rishi Sunak, hailed what he called Northern Ireland's unique access to both EU and UK markets.
Northern Ireland is in the unbelievably special position, unique position in the entire world, European continent, in having privileged access, not just to the UK home market, which is enormous, 5th biggest in the world, but also the European Union single market. If you guys get this sorted, then we want to invest in Northern Ireland, because nowhere else does that exist. That's like the world's most exciting economic zone.
Now, for more, we're joined by Bloomberg's UK correspondent, Lizzie Burden. I fired up Prime Minister there. Lizzie, so what do we know about the Windsor framework and what it means for the real economy?
Yeah, a bit of a head-scratching observation there from the self-confessed coke addict. In terms of the economic benefits of the Windsor framework, there's a lively debate going on here in the UK. Karen Ward, who's an economic advisor to the Chancellor, she told us it would boost investment and boost growth because of the reduced uncertainty. And the Chancellor, I should say, the Prime Minister actually jumped on that, and he was touting the economic benefits himself. But there was a fascinating note from ING's James Smith yesterday, drawing on Bank of England's survey data, where actually he said that Brexit isn't the top concern for investors anymore, and actually it's energy prices that's driving their decisions. And he also showed that overall Northern Ireland only contributes about 2% to overall UK growth, and if anything, Northern Ireland's been growing more rapidly than the rest of the UK. So this idea that this deal is going to boost the economy, he's poured a bit of cold water on it, but it's a healthy debate started here at Bloomberg.
Cold water, not Coca-Cola. We should point out, Coca-Cola addict, self-confessed Coca-Cola addict, the Prime Minister, and of course former Chancellor. What are investors saying about this then?
Well, interestingly, and I should say, why listen to politicians and economists when you could have markets which don't lie, as Guy Johnson likes to tell me? BlackRock and Aberdeen have said that they don't think the deal will meaningfully add to investment. Invesco says that some of these investment flows may have been permanently lost forever.
Okay, Bloomberg's UK correspondent Lizzie Burden on maybe a bit of caution from investors around the prospects for the output coming out of Northern Ireland. Of course, plenty more coming up on the UK and the future of London. Stay with us. This is Bloomberg.
going to name a couple of your babies. I don't know if I'm asking you to choose amongst your children, but some of the most recognizable buildings by you, of course, the Millennium Bridge, London City Hall, the Reichstag, and the Great Court British Museum. What was your favorite project to do?
The Reichstag does stand out because, first of all, it's an energy manifesto. So it transformed something that was dependent on fossil fuels. It uses all the technology to produce something which is essentially carbon neutral. And as a public building, that's a statement. It's a symbol of a city. It's a symbol of a nation. It incorporates works of art. It's recycling an existing building, which, as I mentioned earlier, is the ultimate in sustainability. If you can give a new life to a building, it also creates public space at the roof level. It is the most visited parliament in the world, so it puts the public above the politicians who are answerable to them. And that, of course, was made possible by the politicians. So it's a demonstration of democracy in action.
This is Bloomberg.
Welcome back to The Open, everyone. 30 minutes into the European trading day, and here are your top stories. Chinese manufacturing activity rises by the most in over a decade, propelling a rally in stocks and commodities. Gloom at Goldman. The company's shares fall as the chief executive, David Solomon, tries to persuade investors the bank has a ready solution for its troubled consumer unit. Plus, results are in for Nigeria. The ruling party's Bola Tinubu is declared winner in the presidential election amid opposition protests.
Okay, let's check in on these markets then. A modest gain across the European benchmark. The Stoxx 600 currently up a little over 0.1%. Yes, China has been a catalyst. In fact, the Chinese market's ending up on the mainland a little over 1%. On Hong Kong, though, the HS Tech Index gaining more than 6%, and the MSCI Asia Pacific Index up around 1.4%. The manufacturing data coming in strong, and home sales as well, really consequential for that economy, rising for the first time in about 20 months. Across your sectors then, consumer products leading, up 1%. Technology also having a pretty decent gain as well, 0.7%. At the bottom of the list, real estate down 1.6%. Banks also coming under pressure, down about 0.8%. There isn't much conviction now, though, across these European markets. Futures in the US pointing to gains of between 0.1% and 0.2%. Let's drill into the miners, though, because that sector is certainly doing well again, tying into the real estate sentiment in China, the modest optimism's coming through there, the demand expectations around things like iron ore and copper as well. And you can see the miners really benefiting on the back of stronger data out of China. You do have the Lianghui, or the NPC, the National People's Congress, starting later this weekend, and you'll see if we get a growth target from China. Could be consequential. Rio Tinto then gaining 4%, and you can see the likes of Anglo American as well in similar territory, up almost 5%. The miners on a tear this morning, Fran.
Now, Tom, the Windsor framework has investors optimistic that the UK may actually finally be able to move forward following Brexit. So could ailing UK assets finally be back on the road to recovery? Well, we're now joined by Citigroup EMEA Chief Executive Officer David Livingstone. Thank you for joining us. I mean, it's a perfect day, actually, to catch up on your thoughts on the City of London and what it means in general for UK assets. Have they become more attractive since the Windsor framework? There's still a lot of questions on if this can be passed through.
I don't think they were unattractive before the Windsor framework, but there's no doubt the Windsor framework is positive for sentiment in terms of overall relationship between the EU and the UK, and that must be good on a number of dimensions, not just sausages in the Irish Sea, but actually on all aspects, and financial services being one of them, in terms of trade and other areas of cooperation. And I think you saw a real thawing of EU position and UK position over the recent days, and the negotiation of the framework, and so I think that's the positive. And even before that, though, I think overall we were very positive on the sort of post-Brexit position, particularly of the UK. and focused in the EU on the things that the EU needs to do to build its own sort of capital markets and depth of investor markets.
What gives you that optimism around the prospects of a post-Brexit Britain, given the economics, given the data pointing to the damage? And do you think that Rishi Sunak has done enough? Can we put that risk premium behind us now? The Liz Truss risk premium, has he dealt with that? Is that now in the past?
I think we need to break things down on that, because I think what happened in September actually, in terms of the debate around, is it growth, is it taxation, is it the budget, they're things which are perennial that governments need to deal with, and I think Prime Minister Sunak and Chancellor Hunt have to deal with those in the upcoming budget. But I think what remains very positive in the UK is the dynamism of formation of new sectors and new economies. It remains a place of material venture capital and seed investment. And it's one, I think, which we can point to and sort of say that will continue. Those conditions, the talent in the UK is extraordinary, the universities are very strong. And so I think those stay constant. They have nothing to do with a Windsor framework, but they are certainly not harmed by there being better relationships between the UK and the EU.
And you're spending tens of millions of dollars, I think, revamping your London offices, right, in Canary Wharf. So you've always been bullish on London. How's that going?
Very well. We're spending a little bit more than that. As you can imagine, a 42-level tower is quite expensive to refurbish. But it is a complete statement, not just the acquisition 4 years ago of that building, but also the major refurbishment. It is an absolute confirmation of our confidence in London as our regional headquarters for EMEA, and a statement about our confidence in the UK.
And beyond the UK, last year, Europe produced some of the biggest revenues, the most revenues, in fact, for the institutional part of the business. Does that continue? What was driving that?
I think, and I'll just correct one thing, it was EMEA, not just Europe. I think we all know about the volatility in markets, particularly energy markets, that came as well as equity and debt markets. And I think the depth of the markets in Europe and the challenges that clients face and that need assistance with, whether it's risk transfer, whether it's capital management, whether it's advice, whether it's capital raising, those conditions remain. And the thing about EMEA, of course, is you've got big developed markets like Europe and the UK, but you've got very strong emerging markets in the region, Middle East in particular, where there's enormous, not just capital, but also restructuring of economies happening, which are really triggering some very interesting opportunities for our clients. And then, of course, Africa, which is if you like, the not-so-sleeping giant for the next stage.
David, what are deal volumes actually looking like in EMEA? Because if you look at Bloomberg data, it shows that basically this region, or EMEA, is falling. Deal flows are falling faster than the rest of the world. And I don't know if there's an underlying concern on that.
Overall, if by deals you mean M&A transactions or capital raisings,
or IPOs,
IPOs, yes, they are at a lower level. However, we see, and this isn't just sort of normal optimism, we genuinely see a backlog building and particularly of strategic dialogues. And one of the things which all our clients are looking at this year is, yes, we've got the variables of interest rates and inflation and how is quantitative tightening going to impact it, but what will happen to corporate profitability and what are the decisions that they need to make, whether it's consolidation, whether it's divestment, as a result of what's happening to their own performance. And they're the conversations which are very live right now with our clients.
I want to bring it back to the China question, David. I know you've got views on this, because you're getting a dueling narrative now out of Beijing. You've got Xi Jinping doubling down on party control across the government and corporations once again. We know that is intrinsic to his views about the direction of travel for China. But at the same time, I talk to businesses operating in China, foreign businesses. They are being courted like never before by Chinese officials, say, please invest now that we've reopened. The decoupling, the ability for your clients to invest in other regions, to diversify, how much of that is a potential opportunity for you at Citi? How do you ride that?
So we are, as your question implies, the most global bank, and so we have a network in 100 countries around the world. There are two dimensions, I think, that are going on. One is that the private sector in China, so the domestic private sector, is also being re-encouraged to be investing significantly. So you have the benefit both of the inbound encouragement, if you like, and that is a change in tone, as well as the private sector in China being encouraged. So we remain positive, therefore, on the dynamics within there. However, there is definitely a recalibration of global supply chains, which is happening and has been happening since COVID, accelerated by the war. And our clients are moving and changing their concentration of their supply chain away from China. That will be a multi-year, decadal type trend. And we're seeing places like Mexico, like Vietnam, others benefiting very significantly. And that's something which we can assist with wherever our clients go.
But I mean, these are supply chains. What about the real stuff? The rare earths, the chips. Is that also going to move away from China?
Yes, is the short answer. One of our clients during the pandemic thought they had, an automotive manufacturer thought they had a very diversified supplier base because they had 5 top-tier suppliers. What they didn't realize is those top-tier suppliers were all going to the same supplier of chips in China. And so there was no diversification. I think our clients are now much more concentrated, particularly in critical elements, goods, materials, mining, metals, that they have a genuinely diversified and deconcentrated supply base.
What is the revenue potential for Citi from this diversification then that you're seeing? How do you lean into this?
Well, we move trillions of dollars from our clients every single day, investor clients and corporate clients, and as they go through their recalibration, opening new businesses for them, opening new accounts, managing their capital around the world, managing their capital expenditure is something that's innate. That's what we do. And I think the greater diversification plays to the network strength that we have.
Dave, talk to us a little bit about ChatGPT. So I know you're amongst, you're one of the many Wall Street banks that have banned this. Is this because of regulation? Could it come back? It's unclear the relationship banks will have with this in the future.
It's not really about regulation. I think it's about our own judgment about what we allow inside our systems. And you can imagine something which is very, very new, only just been released. Its applications, generally, but particularly we need to be careful running financial services systems of what we allow in. So we'll sort of see how it develops externally.
What are you worried about?
Worry about the stability. It is just as we know, it's a predictive tool that picks the next word that's most likely. If you wanted to use that for coding, is that going to actually result in better coding than you've actually got with your current people and current systems? And so I think it's far too early to sort of be relying on something like that in a critical systems architecture.
Does longer term generative AI become the future of finance 10 years out? How central will it be?
We don't know. And I think it's definitely one of those things which you absolutely need to be on top of in terms of development. But it also has, the nature of AI, it is automated and has machine learning inside it. We need to know how that's going to behave and how it's going to control. So I don't think we can predict that it's definitely the future.
Okay. David Livingston, Citigroup EMEA CEO, thank you very much indeed for joining us on All Things from the benefits post the Windsor framework as well. The upside potential here in the UK, pretty bright outlook for the UK, but as well the opportunities around diversifying away from the Chinese market. Coming up, we are going to dive deeper into the Nigerian election results, what it means for Africa's biggest economy. That story is next. This is Bloomberg.
Amazon acquired Zoox back in January 2020 for what reports suggested was $1.2 billion. Since then, the company has revealed its Zoox vehicle. This is, I think, a rectangular passenger-focused vehicle with no driver's seat or steering wheel. How would you describe it?
We describe it as a purpose-built vehicle, but it's really a robo-taxi. That's its purpose. And essentially, it's about transporting people from point A to point B on demand in the most effective, cleanest, and most enjoyable way.
So why won't you call it a car?
Because a car is, there's an inference that there is a driver. Whereas in our robotaxi, there is no manual driving. A human cannot really drive it to transport passengers. So we want to make sure that that mindset, that shift, that distinction is clear.
PSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit pso.org/now, where the music plays on. PSO season sponsor, Bank of America.
It was a highly anticipated investor day for Goldman Sachs here in New York, and management is looking to Goldman Sachs 2.0. That is the investment bank and trading businesses supported by a $2.5 trillion asset management behemoth. Now, this all comes after a pivot in the consumer business. They've renamed that unit a platform services business, and they don't expect it to break even until 2025. That also comes in the middle of a tough economic environment. We spoke earlier to Goldman Sachs COO and President John Waldron. This is what he had to say.
Most of our clients are very concerned about the inflation, particularly corporate clients. They see it being more persistent in their businesses. The marketplace is a little bit more complacent, I would say, on inflation in terms of how the market trades inflation. That, to me, is a disconnect that has to get adjudicated over the course of the year, and we're obviously keeping a close eye on that.
Of course, that could create challenges for some of the core businesses like capital markets and trading, but Goldman Sachs has been known to make money from volatility in the past. Shonali Bassick, Bloomberg, New York.
The latest there on Goldman's Investor Day. They really were hoping to get stock up, but actually it fell on the day some 3.8%. Now, Bloomberg Intelligence has calculated that European companies have announced buybacks of nearly $70 billion so far this year. That's a 14% jump year on year. Energy firms flush with cash after a surge in oil prices, and banks boosted by higher rates are leading the way. Well, Santander's Anna Botin also spoke to Bloomberg.
Success is delivering on what you commit. And we delivered on the 2019 Investor Day plans in spite of COVID, the war in Ukraine, now inflation. And this is really important. And so that gives us a huge confidence that the model works, that our customer focus in market and global scale and diversification actually are providing good returns for shareholders. And this is an acceleration of that delivery. And this is really what matters in what we said today.
And how much of this is thanks to rising interest rates because of the European Central Bank and the global economy? And how much of this is delivery on strategy?
That's a great question. I would say that today, more than half is actually because we are improving every year, and we're going to do much more in the next few years, improving our operating model. And some of it is, of course, tailwinds. You know, it's not healthy to have an economy with negative interest rates. If you're a saver and you get nothing, and European banks did not charge you, and we're a retail commercial bank, so we suffered more than most. And we're giving mortgages out at 10 basis points. That was a year ago. And so, yes, some of it is tailwinds, yes, but it's a normalization of interest rates. It's a normalization of how the system should work. And more than half is what we are actually delivering in terms of a better operating model.
Are you confident overall about the economy, the world economy? I know you were confident 4 weeks ago when we spoke to you on earnings. Yes. Are things actually even looking better than they were back then?
Well, I've been saying this for months, not just last week. I've been saying that the strength of demand is so high. And the key number for us as a retail commercial bank is employment. And we are continuing to see very strong employment. Now, that's going to change. How fast, I don't know. You know, there is not a painless way of cutting inflation. And so the question is how high a price you pay. And we have a lot of experience in managing in inflation countries, not just now, but for years. And so the sooner you cut inflation, the better. But you do have to take some pain.
Santander Executive Chair Anna Botin speaking exclusively to Francine, of course. Let's pivot now to the politics of Nigeria. That country's ruling party candidate, Bola Tinubu, has been declared the winner of presidential elections with more than 35% of the vote. However, the result may be challenged in court, with some opposition parties claiming the contest was flawed. Bloomberg's Jennifer Dabasaja joins us with the details. Jen, break the results down for us. There is controversy.
Yeah, there's a lot of that, Tom. I mean, when you mentioned 35%, we did see Bola Tinubu get that. But when you look at sort of the totality of the election as a whole, there's a lot of questions about the discrepancies between voters. So just to give you some background, there were 93 million people who were registered to vote. 87 million people actually picked up their ballot. But if you look at the to the totals of all of these candidates, only 25 million people actually vote. And so a lot of people are questioning what happened with the counting. Why did it take so many days? And even though we are hearing from the ruling party candidate, Bola Tinubu, who is saying he's declared victory, there's a lot of people wondering, what the opposition parties will do now, because yesterday they were calling for this to be canceled altogether.
So what does this mean for the incoming president, Jen?
Yeah, I mean, it's still going to take a little bit of time to see what exactly this means. I mean, the president's not going to be sworn in until the end of May, but we're going to have to see whether or not there will be a court challenge in the next 3 weeks. But investors are just waiting to see somebody who can get on top of a lot of the economic issues that Nigeria is dealing with, in particular debt and fuel subsidies that are really eating up a lot of the revenue of this country. There's also a lot of question about what's going to happen with the central bank governor. I was just in Nigeria and experiencing a lot of the issues around the local currency, the naira, and that is a lot of the central bank governor is being criticized for that. And so it's going to be really interesting to see sort of what this next president does in terms of his own policies.
So what, it was difficult to get cash out? Or it was impossible?
You cannot get cash out. And that's a lot of the frustration of people on the ground, because they cannot operate their businesses. Investors aren't investing for that reason in particular. And so this really needs to turn around for a number of reasons.
Jen, thank you so much. Jennifer Sabazaja there with the very latest on Nigeria. Coming up, well, French manufacturing PMI due imminently. We'll break that down. But I think first we also have the Bloomberg First Word News, or we'll get to that in a minute. This is Bloomberg.
Crucially important, and I think we've moved from this attitude from it's an indulgence, a waste of time, almost an illness that needs a cure.
For something as universally important to human life as sleep, mysteries surrounding its necessity and utility have only just been recently uncovered.
Some of our biggest discoveries were in the 1970s or 1980s, and so it makes it a really exciting field because it seems as though we're uncovering new insights each and every day.
Some scientists are going further to find out how sleep and what happens there can be harnessed to further expand our understanding.
It's easy to memorize things. That makes you smart if you can spit back a lot of facts. But if you want to be wise, if you really want wisdom, you got to know when and how and why to use that information. And that's what your brain figures out while you're sleeping.
Politics to the world of business. Balance of Power with David Weston brings you news, analysis, and insight from and about politics power players. Balance of Power, weekdays on Bloomberg.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Welcome back to the Open. We are 52 minutes into the European trading day. The China catalyst fading across these European markets. The benchmark now flat. You do have the FTSE 100 still gaining, adding 29 points at 7,906. At the top of the sectors, consumer products leading with gains of around 1%. At the bottom of the list, real estate futures in the US also moderating, just gaining 1/10% on the S&P E-minis. Francine.
Now, we're getting some PMI figures out of France. I have to say the main concern is inflation. So unless we have a PMI that's really cratering, which is not, the focus will firmly be on inflation. The PMI 47.4, anything below 50 is contraction. Preliminary and what was expected to be confirmed was 47.9. So it's a 0.5%, half a basis point fall. And then we've heard from a couple of politicians, including the government spokesman, though, saying they're also expecting French inflation to hit 10% in March, and that'd be very worrying.
Yeah, particularly after the numbers that we saw yesterday. So this is a bit of a soggy print when it comes to French manufacturing, firmly in contractionary territory, of course. We've also been hearing from the Bank of France governor, of course, on the ECB board as well, Mr. Villeroy, and he's been speaking in the French Parliament in Paris. He said the risk of recession can now be ruled out. There we go, some confidence there, despite the soggy print on manufacturing. The risk of recession for France can now be ruled out. Inflation data mean we must persevere on policy, and he's saying that the ECB should reach its terminal rate by September at the latest. The commitment there to bring inflation back to 2% by the end of 2024. François Villeroy de Gallo, of course, giving testimony there and speaking in Paris.
Well, yeah, that's really interesting because so the thinking is, of course, you slam inflation, almost not caring about the economy sooner, because if you wait too long to see the monetary policy effect from last year, then you miss the boat. But saying that you'll reach peak inflation in September means a lot of rate increases. I know they said, and Madame Lagarde said it 2 days ago, she's still expecting a 50 basis point hike in March. But does that mean we're back for like 50 basis points in April and then beyond? It's aggressive moves from the ECB that could really hurt the economy going forward.
And it's becoming more consensus that the ECB is now becoming even more hawkish, arguably. There's catch-up, of course, between the ECB and the Fed, but more hawkish than the Fed, at least in the quarters ahead. And, of course, the expectation from these markets that you could get a terminal rate of the ECB of around 4%. Currently, I'm looking at euro-dollar trading higher at 106, a gain of 0.6%. We've got German PMI crossing as well. February manufacturing PMI for the largest economy in Europe coming in at 46.3, slightly softer than the prelim data of 46.5. So that is the manufacturing PMI for Germany for the month of February. It's also not a particularly pretty picture, Fran.
No, and we're also getting some employment figures actually out of Germany, so we'll get on to that. Again, it's a little bit more backward-looking. I mean, inflation is also a little bit backward-looking, but if you look at, the choice between higher inflation and the economy, which we're seeing through unemployment and PMIs, I suspect that the only thing the central bank is looking at the moment is inflation, trying to nail that before they worry too much on the economy. So unemployment at 5.5%, so that's unchanged for the month of February.
Another thing to watch, of course, is what China does to support the European economy. We've had a reminder of the strength that's coming through, the latent strength that's coming through from China with its own manufacturing print, of course, of 52, firmly in expansionary territory, and that's the biggest jump that we've seen in about 2 decades. And just a reminder of potentially the upside you could get from China. And a redhead crossing the summer right now, the offshore yuan rallying 1%. On the back of that data, fueling bullish sentiment, at least for the Chinese currency. When it comes to the equity markets here and though, it's faded, really, the optimism around the China story. Currently, the benchmark European Stock 600 is flat. Futures turning around, though, in the US, gains of 0.2% for the S&P E-minis. Futures, so Nasdaq futures up 0.2%. That is it for the European market open. Surveillance early edition is up next. Plenty more. Stay with us. This is Bloomberg.
very transparent to the shopper before they accept an order, what the order is going to look like, how much we're going to pay them, and how much like the consumer is paying them. And so they can decide whether they take an order or whether they refuse it. And that's the kind of flexibility that our shoppers really value and the kind of transparency that they want.
Are you seeing a labor shortage right now? And what are you doing to combat that?
It's different in different places. Our demographic of shoppers is completely different from food delivery and ride sharing. We're 70% women and half of them are moms. And that's because a lot of the job at Instacart is very different than just being in a car with strangers. It's about like going to the store, doing a good job of customer service, of really picking the right products for the consumer. And we are seeing that being very appealing to women.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
On the David Rubenstein Show, Peer-to-Peer Conversations, I uncover the untold stories of the world's most successful leaders. Watch Wednesdays on Bloomberg Television.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
That's a question I get all night.
Bloomberg, top experts, great questions. This is Bloomberg Surveillance, Early Edition, with Francine Lacqua.
Good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. Chinese manufacturing activity rises by the most in over a decade, spurring a rally in stocks and commodities. Bloomberg understands that U.S. businesses are poised to invest billions of dollars into Northern Ireland if the British Prime Minister is able to gain political support for his new Brexit deal with the EU. Plus, results are in for Nigeria. The ruling party's Bola Tinubu is declared winner in the presidential election amid opposition protests. Now, first thing is first, so let's check in on the markets. We're getting a boost because of what's going on in China and some of the optimism surrounding activity, surrounding housing, and of course, that has implications for the National People's Congress that starts on Sunday with a possible new forecast for growth. Now, European stocks in higher, not only because of the recovery in China, but also better than expected overall sentiment for earnings. Euro area February manufacturing PMI pretty much in line with expectations, 48.5. Preliminary was also 48.5, so it is in contraction territory because it's below 50. We had France a little bit softer than expected. We had Germany a little bit softer than expected. We also have the French central bank governor testifying in the Assemblée Nationale over in France, and really the message there is we will deal with inflation. He's expecting peak interest rates in September. All right, S&P futures getting some 0.3%, euro dollar on the back of those PMIs, but really huge repricing on the ECB peak expectations that had started to happen yesterday, and then crude oil 84.12. Let's also look at the European map to see if there's meaningful differences. Usually they're not, sometimes there are. Today they're not that much between the FTSE and the CAC, also the FTSE MIB, and they're all around 0.4% higher, between 0.3 and 0.6% higher. So factory data in the world's second largest economy has surged the most in a decade, beating analyst expectations. Well, China's official manufacturing PMI came in at 52.6 from the month of February, well above the 50.6 estimate. Now, for more on all of this, we're joined by Bloomberg's chief Asia economics correspondent. He's Enda Curran. Enda, good morning, good afternoon. So what can we read from this? This is the first clean set of numbers that we have from China since the reopening.
It is, and it's a positive read on China's economy. It indicates actually recovery is going faster than expected and faster than the initial recovery when the pandemic broke out back in 2020. Like you mentioned, we had the PMIs today, Francine, coming in at 52.6. Quite strong growth, broad-based there on the services side, with indications of consumer spending, for example, but also a rebalancing with manufacturing strength, also surprisingly picking up an increase in manufacturing employment as well, also, for example. And on the housing side, with data suggesting that housing sales increased on year for the first time since around the middle of 2021. So a broad sweep of numbers covering the services side of the economy, the manufacturing side of the economy, and a look at the housing side of the economy. And all told, it points to a pretty robust recovery and shows that China's exit from COVID-0 is somewhat on track.
So, and we also have the National People's Congress. It starts on Sunday. What does the latest reading mean for growth forecasts going forward?
I think it has to be a good backdrop for when those officials do gather in Beijing. Like you mentioned, it begins on Sunday. It's kind of a rubber stamp parliament, sets out policy for the year ahead. There will be an economic growth target unveiled on Sunday. Economists are expecting that to come in at least at 5%, probably over 5%, which is a pretty robust figure for China, given where a year ago many people were continuing to mark down their forecast for China and warning of longer-term structural decline. But it seems to be better mood music around the activity indicators at the moment. The authorities are focusing on growth. We know they're going to continue to support the economy. So I think for the near term, at least, it does sound like the narrative around China's recovery, economic recovery, will remain somewhat upbeat.
All right, thank you as ever for your great analysis. Our Enda Curran there in Hong Kong joining us this morning. Now, Goldman Sachs shares fell yesterday as the bank hinted at further dismantling of its struggling consumer business during its investor day in New York. Well, Bloomberg's Sonali Basak was there for us.
It was a highly anticipated investor day for Goldman Sachs here in New York, and management is looking to Goldman Sachs 2.0. That is the investment bank and trading businesses supported by a $2.5 trillion asset management behemoth. Now, this all comes after a pivot in the consumer business. They've renamed that unit a platform services business, and they don't expect it to break even until 2025. That also comes in the middle of a tough economic environment. We spoke earlier to Goldman Sachs COO and President John Waldron. This is what he had to say.
Most of our clients are very concerned about the inflation, particularly corporate clients. They see it being more persistent in their businesses. The marketplace is a little bit more complacent, I would say, on inflation in terms of how the market trades inflation. That, to me, is a disconnect that has to get adjudicated over the course of the year, and we're obviously keeping a close eye on that.
Of course, that could create challenges for some of the core businesses like capital markets and trading, but Goldman Sachs has been known to make money from volatility in the past. Sonali Basak, Bloomberg, New York.
Sonali there at Goldman's Investor Day in New York. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. At least 36 people have died in a train crash in northeastern Greece. The collision took place in the Tempe Valley when a passenger train traveling from Athens to Thessaloniki collided with a freight service. The train operator says 350 people were on board. Rescue operations are continuing in what officials are calling very difficult conditions. Bola Tinubu has been declared the winner of Nigeria's presidential elections. The ruling party candidate and ex-governor of Lagos State won 35% of the vote, beating the main opposition party, which took 28%. Tinubu will inherit a mountain of public debt, which grew sevenfold during Muhammadu Buhari's 8-year tenure. Some opposition parties claim the contest was flawed, and many challenged the result in court. Now, UK Prime Minister Rishi Sunak has been embarking on a push to win support for his post-Brexit deal with the EU, a day after unveiling the agreement dubbed the Windsor Framework. Sunak did visit Northern Ireland in an effort to win the backing from the Democratic Unionist Party. The UK PM also addressed Conservative MPs at a meeting in Westminster. That was yesterday evening. Sunak says the deal is a unique opportunity for Northern Ireland. India is bracing for a sweltering weather, already suffering its hottest February since 1901. Its weather office says there's an enhanced probability of heat waves in most parts of the country, and that's over the next 3 months. The extreme weather poses a threat to wheat crops, which were forecast to actually reach a record this year. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Leanne Gerrans, and this is Bloomberg. Francine.
Leanne, thanks so much. Coming up, we'll be hearing from Atomico co-founder and now managing partner of Moonfire Ventures, Matthias Lundman. We'll be talking all things venture capital, AI tech, and much, much more. That's a little bit later today. This is Bloomberg. So Fabian, talk to me a little bit about the ocean. It covers 70% of the planet. It gives us food, it gives us jobs, it gives us, of course, oxygen. We're taking too many fish out, we're polluting it, we're making it warmer, and only 3% of it is protected. What frustrates you the most about this?
The basic frustration is our ignorance about how integral ocean is to not only our well-being, but to our existence. And for far too long, we've been using the ocean as an endless resource in a garbage can. Imagine our planet is a three-dimensional system. The ocean represents 99% of our world's living space, about 3.4 billion cubic kilometers of volume, within which the vast majority of biodiversity lives and thrives. And that's what we're beholden to. That is what makes us possible as a species.
Economics, finance, politics. This is Bloomberg Surveillance, early edition. I'm Francine Lacqua here in London. Now, strong China manufacturing data has pushed oil prices higher this morning. WTI posted its fourth straight month of losses in February. Now, here with me to dive into the commodity space, Jeff Curry, Goldman Sachs Global Head of Commodities Research. Jeff, I'm so happy to have you in the studio. We took like months to arrange this. Yeah. And then you sat down and you said, oh, the commodity space is a little bit more boring than usual. Is it? So much can happen.
It is for the very short period. And I think this manufacturing data coming out of China is some of those green shoots we need to see to get the bull story ramped back up again. In the current environment, we have oil inventories beginning to draw in June of this year, and then metal inventories drawing a little bit sooner, April, May. But you need the micro to start to perform with inventory draws. And then you also have to be pretty comfortable that the macro gives you the green light again, in the sense that there's a lot of fear of a strong dollar, a repeat of what we saw last year. So people become comfortable that you're not going to get the repeat of last year, which our base case is no, that core CPI will moderate. The Fed's not going to have to go on another rampage again.
But moderates to what? Does it moderate to 4%, or does it actually touch 3%? Because to get to 4 to 2%, they have to slam the economy.
For our view right now, we just need it to keep going
down. Fine.
And because I think for the one thing I learned last year, to be long commodities, you need money supply stable to growing. When money supply is going straight down, it's hard to be long commodities. So our base case is, hey, you get stable money supply, then you get the draw on the inventories, and that's going to be the recipe to get a much stronger finish to the year. I do want to go back that at the beginning of this year, our view was it was going to be a repeat of 07, meaning cooling U.S., resurgent China, and a recovery in Europe. You get those three together, that is like the Goldilocks scenario for commodities, because you get a weak dollar that gives you a tailwind against the strong Chinese fundamentals.
And that's what, 50-50 that we get that?
Now I think it's 2017. It's a tuned down version of it. Our returns for commodities at the beginning of the year was 43%. Now it's 31%. And actually in 2017 you got 30%. And it was kind of a similar scenario. A U.S. that was bouncing in and out of growth and non-growth, a Fed threatening to raise rates, and then you had China and Europe power ahead at the end of that year, and that's what really drove commodities.
Jeff, you gave me an epic interview in the middle, I think it was in the middle of lockdown, where, with very Italian hands up, you said, we're running out of everything, which is very true. Has COVID and actually the war in Ukraine changed the commodity complex forever?
I'm not going to say forever, but is the situation tighter today than when we did that interview? Absolutely, yes. The big event last year was not Russia. It was China. I mean, global oil demand contracted 2% in the fourth quarter of last year. That's a recession in my book. And that created the spare capacity in oil, metals, and everything. And that manufacturing data that came out this morning says we're starting to reverse that. So you can think about, we created new supply not through investment, but through China contracting, through lockdowns. Now, as China comes back, we're going to lose that spare capacity, and we're going to be back to the same problems we had before, but even much worse because we haven't invested.
So what, oil at $30 more than here?
I mean, our base case is, we get into the fourth quarter, towards the end of the year, we get back above 100. But a lot can change if you start getting the momentum. The other thing too, again, the investor participation in this space is really low. So, you haven't had me on here in quite some time because clients are not interested in the space like they were 6-12 months ago. And as they get interested in the space again, then you get capital flows coming back in. It'll help them likely push the market higher.
I mean, we don't really talk about peak oil anymore. Is that because it's been pushed back, or because we're uncertain because we're going back to more fossil fuel usage?
Actually, I heard the term peak oil applied to supply recently again. But I think that the fact of the matter is that there's a lot of concerns around the inability to meet supply in places like Europe, and particularly on the gas side, such that the energy security question is right back up there. And so energy security, reliability, affordability of energy are now all back on the agenda. But I think your point that peak oil is not a mainstay. I think at this point the ability to get from one year to the next, given how scarce supply is really the focus. And the markets have been trading that way. By the way, a commodity super cycle is not an upward trend in prices. It's a sequence of spikes. And we're coming off the backside of one spike. My confidence that we'll see another spike in the next 12 to 18 months is quite high. And then it'll change the public debate and we'll move. I think what happens is we saw it in gas and coal this last year. Yeah. The upcoming one's likely to be in oil.
I always love to talk to you, of course, about commodities, but also about crypto. I mean, does the implosion in certain crypto give you vindication of what you thought all along?
Well, when we look at the crypto, I like to liken it more like any other duration asset. Unprofitable tech, growthy. By the way, clean energy falls into that, like, green hydrogen. It's stuff that's not profitable today, but has a story way out in the future. They got crushed because of the fact that, hey, interest rates are higher, and we move into short duration, not long duration, and that killed everything that was long duration. Commodity, by the way, when I say commodities are boring, let's remind you, oil's still at 85, copper's at 9,100, so that the commodity space has still got good returns. I mean, it had great returns last year. We expect good returns this year, but that's what you expect in a high interest rate environment. Another way to say what is a commodity super cycle, it's nothing other than a CapEx cycle. Look at metals prices versus global CapEx.
I know, but is there a day? I mean, and I know they're we had actually the NE chief executive yesterday for an exclusive conversation. I mean, they're giving so much back to shareholders through dividends and share buybacks. Is there a danger that once again over the next 10 years they're going to be underinvested?
Oh, they're underinvested today.
Is that a good thing or a bad thing if we're going through a green transition?
It is a bad thing because it creates commodity shortages today. Yeah. We aren't going to get the green for 10 or 15 years from now. It's like that's long duration, oil short duration. We're not investing in the short duration stuff, only the long duration.
But if we're investing, then it basically keeps fossil fuels alive for longer. I mean, it's almost like a philosophical debate. What do you do as a chief executive?
But let me point this out. By not investing in natural gas, we ended up with higher emissions today. And the reason why is because what do low-income households do? They turn to the lowest cost, shortest cycle fuel, which is wood and coal. And let me remind you, wood emits 5 times what coal does, and coal emits 2 times what gas does.
So this is a strategic policy mistake in the making that we did over the last 10 years. Are we doing the same for the next 10 years?
We'll see what happens when we start to see high commodity prices again. I think when we look at the lack of investment in the space, it's not because of ESG concerns. It's because it's a history of bad returns. I mean, just remember, this sector destroyed more wealth than any other sector known to mankind. I mean, the U.S. E&P sector destroyed 54 cents on every dollar over the previous 10 years. That's a big reason why they aren't getting money. Second reason, we were 130 about, 11 months ago, and we were 78 the other day. That volatility is unacceptable for most investors. And then a third I would put as ESG. But I was asking a CIO recently, been in the business forever, and she said to me, she goes, people will buy commodities the day that the 3-year moving average of the Sharpe ratio exceeds that of the NASDAQ and everything else, because then they'll go, hey, we're behind this. And we're probably sometime in the next 12 to 18 months of hitting that.
Okay, that's a great chart. I'm going to get it up, I hope, in the next hour. And then Jeff Curry, you have to come back. Jeff Curry, Goldman Sachs Global Head of Commodities, with a robust conversation of the commodity complex. Coming up, Rishi Sunak playing the waiting game while Northern Ireland's DUP studies his new post-Brexit trade deal. But investors are paying close attention as well. So we find out why next. And this is Bloomberg.
Fitzpatrick are the exception in finance, not the rule. Morningstar has taken an in-depth look at women in the industry, and the numbers are startling. The firm found that in 2020, women made up 14% of global fund managers. That's largely unchanged from the year 2000. Morningstar also calculated that while the number of women at the top of the corporate ladder has increased, it won't be until 2060 that women will reach parity with men in the C-suite. Studies have shown that increasing the number of women managers leads to better decision-making and moderates overconfidence. European Central Bank President Christine Lagarde insists that male domination of the banking industry made the 2008 collapse of Lehman Brothers more likely. As Lagarde put it, if it had been Lehman sisters rather than Lehman Brothers, the world might well look a lot different today.
You've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have.
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, U.S. businesses could be set to invest billions of dollars into Northern Ireland if the deal on post-Brexit trading arrangements brings political stability to the region. Well, Prime Minister Rishi Sunak hailed what he called Northern Ireland's, quote, unique access to markets.
Northern Ireland is in the unbelievably special position, unique position in the entire world, European continent, in having privileged access not just to the UK home market, which is enormous, 5th biggest in the world, but also the European Union single market. If you guys get this sorted, then we want to invest in Northern Ireland, because nowhere else does that exist. That's like the world's most exciting economic zone.
Now, for more on all of this, we're joined by Bloomberg's UK correspondent, Lizzie Burden. Lizzie, great to have you on the program. So what are economists saying about the Windsor framework?
I'm still baffled by Rishi Sunak there pointing out the privileged position of being in both the single
He's
market
raring to
and
go.
the
He's
UK.
like, guys, this is great.
If only we'd realised this in 2016. The economists are debating this furiously, the economic impact of the Windsor framework. We spoke to Karen Ward, Cherry Hunt, the Chancellor's economic advisor, about this, and she said that it's going to reduce uncertainty, boost business investment and boost growth. And Rishi Sunak himself has been touting the economic benefits of the deal. But actually, there was a note from James Smith at ING yesterday where he pointed out that according to Bank of England survey data, actually business isn't the big reason why businesses aren't investing, and their decisions will be more steered by energy prices as things move forward.
So what does it mean going forward? Like, when does this actually get passed through? Do we know that the unionists are behind the deal?
Well, we're still waiting for their legal eagles to comb through the text, and the European research group of Tory Brexiters hired a team to do that. We might get more clues at Prime Minister's questions later today, any questions from ERG members or DUP members put to the Prime Minister later, but a carrot that he might dangle is on this investment question. Scoop on the terminal from Alex Wickham and Ellen Milligan today, saying that there's billions ready to invest in Northern Ireland from America if they can get a deal over the line. It reminds me of Bill Clinton in the run-up to the Good Friday Agreement, trying to use business investment as an incentive to get a deal on the table.
Lizzie, thank you so much. Our Lizzie Burden there with the very latest on the deal. Now, we'll also be covering all things UK every week on Thursdays at 9:30 a.m. UK time in our half-an-hour special. Coming up, but we'll be hearing from managing partner and founder of Moonfire Ventures, Matthias Lundman. We'll have a conversation on all things venture capital, AI, tech, and much more. This is Bloomberg. Amazon acquired Zoox back in January 2020 for what reports suggested was $1.2 billion. Since then, the company has revealed its Zoox vehicle. This is, I think, a rectangular passenger-focused vehicle with no driver's seat or steering wheel. How would you describe it?
We describe it as a purpose-built vehicle, but it's really a robo-taxi. That's its purpose. And essentially, it's about transporting people from point A to point B on demand in the most effective, cleanest, and most enjoyable way.
So why won't you call it a car?
Because a car is, there's an inference that there is a driver. Whereas in our robotaxi, there is no manual driving. A human cannot really drive it to transport passengers. So we want to make sure that that mindset, that shift, that distinction is clear.
The top names at the Fed are on Bloomberg.
Inflation's normalizing, but it's coming down slowly. I just think there's going to be a lot more inertia, a lot more persistence to inflation than maybe we'd all want. I'm hearing people still out there pushing price and trying to test where the levels of inelasticity really are. As the meetings go on this year, we'll see what happens. If inflation settles, maybe we don't go quite as far, but if inflation persists, maybe we'll have to do more.
Nobody covers the Fed like Bloomberg, your global business authority.
Welcome back to Bloomberg Daybreak Europe.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets. China open.
This is Bloomberg Technology.
To our television and radio audiences worldwide, welcome now to Balance of Power.
This is Bloomberg.
Chinese manufacturing activity rises by the most in over a decade, spurring a rally in stocks and commodities. Bloomberg understands that U.S. businesses are poised to invest billions of dollars into Northern Ireland if the British Prime Minister is able to gain political support for his new Brexit deal with the EU. Plus, results are in for Nigeria. The ruling party's Bola Tinubu is declared winner in the presidential election amid opposition protests. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, Moonfire Ventures describes itself as the next-generation venture capital fund focused on opportunities in Europe. The fund is especially keen on investments that utilize AI to transform healthcare, fintech, and gaming. Well, joining us now is Moonfire Ventures founder and managing partner Matthias Lungman. Matthias, thank you so much for coming in. You always make me start, smarter on some of these quirky AI consequences, but now AI is all anyone is talking about.
Yeah.
What does it change in terms of, first of all, how easy it is for you to find deals, but also the perception of AI going forward?
Yeah, so it's interesting, everybody's obviously very excited about what's happening in
Excited
this world.
or scared? Depends on who you speak to.
I agree. So it's a little bit of both, and it will change our world, and it is changing our industries across the board. I would say what we're looking at right now is very kind of similar to what happened in the sort of change from Web 1.0 to mobile. So it is a big transformation that we're looking at of moving into this world of AI, but it's not like it's something new. Like the work that we've been doing in this space has been happening since the 1970s, right? Into the 80s and 90s, great fundamental work was happening. You have people like Jeff Hinton, Joshua Bengio, who's doing amazing things. But what really has made it come into the consciousness, I think, and why everybody's getting so excited is because really what ChatGPT-3 was able to do. And in 5 days, 1 million people started using this. And so then everybody got quite excited, said, hey, look, how can this change my product? How can I look at the world a little bit differently? But what I would say, it is very much an incremental improvement. And there's actually 3 things that make that happen, which I'm happy to talk about.
Yeah, and I was going to ask you, first of all, because we speak to Wall Street bankers, and for the moment they've banned it. So is there a part of the business that it won't disrupt? Even if you look at how, we look at advertising, and you go on a website and you search for something, if we start all using this kind of AI like ChatGPT, then they need to rethink their models.
Yeah, I do. Look, I think you're right. I think we have to also slow down a little bit, in terms of, like I said, this has been incremental. It's happening change by change, and we need to make these models stronger and stronger, and that's hard to do. And there's a lot of science required to get there, to get even further. But what it's done today, it's already enhanced a lot, and like you say, everybody, people are using it all over the place. But I think at the end of the day, you need to be good at what you do to be able to use that technology in the right way. But yeah.
Does it change as a consumer? And I want to go into your 3 points and your industries that you're looking at. But as a consumer, do I have a very different experience with how I buy things, I look at things, I even see my GP because of something like this?
Well, look, it's already happening. When I jump on and watch Netflix, I get choices. Those choices are made by machine learning. The same thing with Amazon. I get choices. They're predicting what I might like. Now, I don't always like those choices at the moment, by the way. Like, I don't think they're always doing a good job.
Me too. I thought I was the only one. I was like, wait, who are they looking to? Like, what's the algorithm?
Exactly. And then, like, what do they think of me? Because sometimes I'm like, really? But anyhow, but they're going to get better and better. And when they do, so it's a bit like, they make a perfect cup of coffee 3 out of 4 times. Once they make a perfect cup of coffee closer to 4 out of 4 times, it's magic. And I think that's what's going to change things for consumers. And that's why founders today and people building tech businesses are like,
okay, this actually might materially change my relationship with my consumer.
Okay, so what are you looking at? I mean, your three things, they're basically three industries that you're looking at and how that will change them.
But I would also say before that, though, there's also, I believe, three things that really need to progress in terms of science. So the first one is we need to continue to improve these algorithms. That's really, really hard. That takes time.
And that's just data, right? It's data and chips.
Well, so yeah, so there's components of that. So the next part is compute, right, which is really, like you say, the chips and the hardware, but also the software, the cloud, in terms of that working well. And if we don't make progress on the hardware, we're not going to be able to make the progress that we want in terms of achieving that perfection. And then there's data, and there's also people wanting to or letting you have access to data. So governments are regulating. Of course, you can't have access to everything. And then there's companies that might start doing it. And so data is the new oil, and they're like, hey, hold on a minute, you can't use my data. So those are the things that are inhibiting it. But to me, just to give an example, us ourselves, Moonfire, we're using this. We have 4 machine learning engineers. That's what we're founded on. We are a data-driven VC, and then we're using these models to help us find and look and help our portfolio companies, and that's really, really exciting to us. But also, if we look at some of our companies, we have this one company, Electric Noir, super exciting business, working in sort of mobile entertainment, gaming entertainment business, and the cost of their production has just dropped dramatically. So you think of a Netflix, one episode maybe can cost $8 million. They're building a whole series for $12,000. Then they deploy.
So how does that happen exactly?
Well, then they deploy the technology, and it goes down to like a few dollars. Right. So essentially, the creative aspect of what they're doing is becoming so much cheaper, and so they're utilizing all of these different technologies to produce what their new series, which is Dark Mode, and it was done by them. And for them, they said it was faster, it was cheaper, and the final things, it was better. They thought it was actually scarier than they would have done themselves.
Is there anything that this will not disrupt? And I don't know what that means, but we also spoke to DeepMind. Yeah. This is going to change the way we look at biochemistry. Yeah. I mean, everything is changing because of AI.
Yes.
What happens to emotional intelligence actually between humans?
Well, that's what I'm saying too. Like, I think human beings are working together with technology. I think we have to understand that you're still going to need that human input. And the fact is also the technology is making us think better. We're making us smarter and look at angles that we didn't think of, exactly like they said. It made, for Electric Noir, it made their product better. So they came with outcomes that they wouldn't have thought of themselves. So I do think it is pretty broadly based, to be honest. I think every industry is going to have a component of it, just like the internet has had, just like mobile has had. Yes, it will.
Will it create better quality jobs?
I think so. Because sometimes we have this monotonous work that we don't want to do. So
especially if you're a junior banker.
But even if you're working in science, or you're working in healthcare, and you're reviewing images, but we know the machines can do this very fast, can do it 24/7, and actually they can probably narrow it down, and so you're like, okay, well these are the ones that I really need to look at, and these are the ones I need to spend time, and I need to be thinking about things that are really important, so you can spend the time doing that rather than feeling rushed trying to get things done that are very manual and boring.
So Matthias, what does it actually mean for some of the companies that you're trying to invest in? So there's gaming. Are there opportunities actually in this, given your 4 engineers and algorithms?
No. So for us, we're able to see a lot more companies in terms of that we review. We look at over 2 million companies per year. That's not possible with 8 people and 2 people who are sort of on the investment side. Mm-hmm. So we can do a lot more work, and then we can actually help our companies a lot more, because we can actually provide them with data and information that we pull from everywhere in terms of giving them insights in terms of what they should be doing. But similarly, our companies are doing the same thing of creating magical products.
Do you, and this is very Bloomberg, we also love data and we analyze data, and that's really all we do, but is there any point where you meet a founder and you say, the data is telling me that this is not going to work, but I think it will? And if you look at how, a lot of the big ones got started, whether it be luxury or Facebook. Absolutely. At the time, it didn't make sense, but how do you override the machine learning?
Well, so that's the other thing. Like for us, it's not like the machine's making the decision. We're making the decision. They're helping us become better. They're making us more bionic. But at the end of the day, it's the human mind that makes the ultimate decisions. And so they go just so far. But the thing is, what we're doing is we're not necessarily doing sharpshooting in terms of our technology finding the exact solution. What we're doing is, let's say there's a forest and we're getting rid of a lot of the trees. And we're focusing on the ones that, okay, those are the ones we should be paying attention on. Yeah. Because that's the hard thing in this world. As you know, we have so much information, so much data out there, and we get lost in it. And so the work, again, that this world does is help you to auto-summarize a lot of things. And that's really powerful.
In gaming, does it change the way that it can grow? So, I mean, are we looking at multiples, basically in terms of revenue, but also the growth of the market because of the powerful AI behind it?
Well, I think that gaming is one of those few markets that keeps on growing. So it is already huge, and it will become the main form of media entertainment. But yes, what is really, really cool is that now that basically potentially content production is reduced dramatically, maybe by 99%, you can actually have infinite content, and so you can suddenly create worlds. So it's extraordinary the changes that are happening.
Matthias, thank you so much, as always, for joining us. Matthias Lungman there, Moonfire Ventures and managing partner and founder, joining us on, well, venture capitalism and tech. Now, coming up next, we're joined by Choko Muna, JP Morgan's head of EMEA ESG and Green Economy Investment Banking. We'll discuss the challenges facing the green tech pivot. Catch that exclusive interview next, and this is Bloomberg.
Very transparent to the shopper before they accept an order, what the order is going to look like, how much we're going to pay them, and how much the consumer is paying them. And so they can decide whether they take an order or whether they refuse it. And that's the kind of flexibility that our shoppers really value and the kind of transparency that they want.
Are you seeing a labor shortage right now? And what are you doing to combat that?
It's different in different places. Our demographic of shoppers is completely different from food delivery and ride sharing. We're 70% women and half of them are moms. And that's because a lot of the job at Instacart is very different than just being in a car with strangers. It's about going to the store, doing a good job of customer service, of really picking the right products for the consumer. And we are seeing that being very appealing to women.
Lots happening on Wall Street.
I'm quite encouraged. The center is holding.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
A lot of these areas still have very, very good valuations.
From businesses most influential and instrumental.
It's knocking it out of the ballpark.
Now's not a great time to be speculative. It's time for a pivot.
We're talking about a significant hit to our standard of living.
Bloomberg Wall Street Week, live Friday with replays all weekend on Bloomberg Television and Radio.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, the transition to a green, low-carbon economy will require a big pivot from investors towards clean and green technologies. JP Morgan's Clean Tech Stars Conference in London is trying to facilitate that switch. Now, the event is focused on supporting and scaling up private high-growth companies. Well, joining us now for an exclusive conversation is Choko Muna, JP Morgan's head of EMEA, ESG, and Green Economy Investment Banking. Choko, thank you so much, as always, for joining us. When you look at the two current, trends in deploying capital in green, you have the GOP in the U.S. pushing back, and then you have the IRA really trying to go for green technologies. Which one of these trends will prevail in the end?
Well, I think ultimately we have a big challenge as society to reconfigure the way that our economies are operating towards a net zero world. And the companies that we've brought together, we've got over 30 companies that have raised in aggregate around $7 billion over the last few years and are going on to the next chapter in their journey of development, are absolutely going to be key to that. They straddle all the different green economy verticals, not just low carbon energy, carbon capture and storage, but also sustainable food, alternative proteins, fusion, and so forth. And that's all going to be fundamental, because although obviously funding this, Francine, is absolutely crucial, which is where a bank like JP Morgan comes in, and we're committed to financing and facilitating $2.5 trillion through to 2030 to deliver against the UN Sustainable Development Goals. But we need this technology. So we've got the technology at the moment that will get us on a path to a net zero world by 2030, but from 2030 to 2050, you know, the final straight, as it were, some of that technology hasn't even been invented yet. No. So that's the challenge that we've got. So people can have, you know, there'll be short-term political arguments around these things, of course, but actually the bigger existential challenge we have as a society is right in front of us, and these companies are absolutely key to meeting that challenge.
But how does it impact, I guess, you know, Wall Street's firm's narrative about green investing, and actually how does the IRA impact JP Morgan specifically?
Well, I think the US Inflation Reduction Act overall is a very welcome development, and we're already seeing a lot more plans coming forward to invest in the various different green economy verticals, obviously particularly in the United States. Now, other blocks like the European Union, for example, are working out what they've got in place, the package of support and measures for their businesses here. Is there a gap between what the US has put in place and what they've got in place, and how do they fill that? Now, given that, you know, it's quite challenging because of the risk profile of some of these early stage companies to raise funding, clearly the public sector governments are going to have a role. And if the US Inflation Reduction Act is going to help kind of spur that kind of investment, then that is a good thing. I mean, it's quite interesting, actually, when you look at what's happening in the private market. So the companies that we've brought together today, this is all private capital, because there has been a gap between where greenhouse gas emissions have been coming from, and certainly in the venture private capital space, where the money has been going. So those sectors that make up 85% of greenhouse gas emissions in 2021 attracted around 39% of climate tech investment. That's gone up. So that's now around 40% in 2022, and we hope will be higher in 2023. So there are challenges here, but in spite of market conditions, there's a lot of interest from investors in this space.
And when you look at, of course, the company that the companies that you convened, what do they tell you about European efforts to make up for the Inflation Reduction Act? Is there anything in Europe that actually they tell you is a good thing and could, I guess, temper some of the lack of Europe being as forceful than the US on this?
Well, I think the first thing is that we still need to see the detail of the implementation of the US Inflation Reduction Act. And so there is no doubt that EU domiciled companies are looking closely at what's on offer there. Definitely what they hear sounds attractive, but the detail is going to be very important. I think from the point of view particularly of the EU, at the moment there is this audit process going on to see what is already in place. And actually the EU with the Fit for 55 package, the EU green industrial strategy they're bringing about, these things are already providing support, and they're working out, well, what is not there that might be provided in the US Inflation Reduction Act. But of course, in the short term, one of the easiest measures to implement is relaxing, which they are doing temporarily, the EU state aid rules to facilitate better fiscal support here. And I think at the end of the day, that is what companies in Europe will be looking at, is what are you going to do? What's it going to look like? And at the moment, that's not entirely clear.
Chaka, as always, thank you so much for joining us on Bloomberg. Chaka Muna there, JP Morgan's
pleasure. Thank you for having me.
ESG and Green Economy Investment Banking. Now, coming up, we'll have plenty more on some breaking news, including Uniper. So Uniper has, we understand, a new chief executive. This is a huge energy giant, of course, that has had its fair share of trials and tribulations. They have named Michael Lewis as a new chief executive. This is Sweden's biggest, of course, one of the biggest Nordic nuclear plants. Now, Santander pledged to return a bigger share of earnings to investors as they joined the race with other European lenders to lure shareholders after years of subpar returns. Now, Spain's largest lender plans to pay out 50% of profits over the next 3 years. It's also announced a buyback program and new financial targets, while Santander Executive Chair Ana Botín said she expects the bank's valuation to improve as interest rates rise, and the lender pledges to return a bigger share of profit to investors. Well, she spoke to us in an exclusive conversation.
success is delivering on what you commit. And we delivered on the 2019 Investor Day plans, in spite of COVID, the war in Ukraine, now inflation. And this is really important. And so that gives us a huge confidence that the model works, that our customer focus in market and global scale and diversification actually are providing good returns for shareholders. And this is an acceleration of that delivery. And this is really what matters in what we said today.
And how much of this is thanks to rising interest rates because of the European Central Bank and the global economy? And how much of this is delivery on strategy?
That's a great question. I would say that today, more than half is actually because we are improving every year, and we're going to do much more in the next few years, improving our operating model. And some of it is, of course, tailwinds. You know, it's not healthy to have an economy with negative interest rates. If you're a saver and you get nothing, and European banks did not charge you, and we're a retail commercial bank, so we suffered more than most. And we're giving mortgages out at 10 basis points. That was a year ago. And so, yes, some of it is tailwinds, yes, but it's a normalization of interest rates. It's a normalization of how the system should work. And more than half is what we are actually delivering in terms of a better operating model.
Are you confident overall about the economy, the world economy? I know you were confident 4 weeks ago when we spoke to you on earnings. Yes. Are things actually even looking better than they were back then?
Well, I've been saying this for months, not just last week. I've been saying that the strength of demand is so high. And the key number for us as a retail commercial bank is employment. And we are continuing to see very strong employment. Now, that's going to change. How fast, I don't know. You know, there is not a painless way of cutting inflation. And so the question is how high a price you pay. And we have a lot of experience in managing in inflation countries, not just now, but for years. And so the sooner you cut inflation, the better. But you do have to take some pain.
Our interview with the Santander Executive Chair, Anna Boutin. Coming up, we'll dive deeper into Nigerian election results and what it means for Africa's biggest economy. That's coming up next, and this is Bloomberg. So Fabien, talk to me a little bit about the ocean. It covers 70% of the planet. It gives us food, it gives us jobs, it gives us, of course, oxygen. We're taking too many fish out, we're polluting it, we're making it warmer, and only 3% of it is protected. What frustrates you the most about this?
The basic frustration is our ignorance about how integral ocean is to not only our well-being, but to our existence. And for far too long, we've been using the ocean as an endless resource in a garbage can. Imagine our planet is a three-dimensional system. The ocean represents 99% of our world's living space, about 3.4 billion cubic kilometers of volume, within which the vast majority of biodiversity lives and thrives. And that's what we're beholden to. That is what makes us possible as a species.
How did Jeff Bezos realize you could sell anything on the internet?
The web was growing at something like 2,300% a year. Anything growing that fast is going to be big.
Why did Bill Gates create Control-Alt-Delete?
Kind of become
the poster child of, hey, couldn't you have made this stuff a little simpler?
And what inspired Diane von Furstenberg to create the wrap dress?
The wrap dress created me.
On the David Rubenstein Show, I uncover the untold stories of the world's most successful leaders, right here on Bloomberg.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia.
This is Count Under the Close.
Welcome to Bloomberg Crypto.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition on Francine Lacqua here in London. Now, Bola Tinubu has won Nigeria's presidential election. The ruling party candidate and ex-governor of Lagos State won 35% of the vote, beating the main opposition party, which took 28%. However, the result may be challenged in court, with some opposition parties claiming that the contest was flawed. Well, Bloomberg's Jennifer Zabazaja just came back from Lagos, Nigeria, and she joins us with the very latest. First of all, Jen, good morning. Great work and great reporting there on the ground. So what did you learn? First of all, this is contested. Like, what happens next?
Yeah, I mean, I think the biggest question is going to be what these opposition parties do. Yesterday, on Tuesday, we did hear from them, and they were already protesting the results as it stood. And so they have 21 days now to really see and go to court and file whether or not they are going to appeal this ruling. And what we heard from Bola Tinubu, who is the president-elect at this point in time, he said, you know, in his mind, it was a free and fair election, but was encouraging people to go to court if they are going to dispute this election result and not take it to the streets at this point.
I mean, are there worries that actually this turns into violent demonstrations?
There could be, and it's because I think when you look at Nigeria as a whole, there's a lot of frustrations on the ground. Yeah. There's a lot of issues with the local currency, with gas, with the economy as a whole, with unemployment, and with a lot of young people. And just going back to the president-elect, he appealed to the young people this morning when he accepted the presidency. He said, I want you to be with me. But what we did hear from the Labour Party candidate, Peter Obi, was that he was actually galvanizing a lot of young people. So there's a lot of frustration on the ground that it's sort of business as usual, especially considering the turmoil that we've seen over the past few years in Nigeria. The ruling party is again going to be leading this economy.
So does the ruling party and the new president-elect, can he fix the economy given his mandate?
Yeah.
But does that also just need to wait until the election is settled?
Well, a lot of investors, based on sort of the market reaction we're seeing, are hoping that he's able to do something, at least in the short term, to some of these reforms. In particular, fuel subsidies, which have cost the economy much of their revenue. And so he's really hoping, the investment community is really hoping that he can come in. But he's going to have to unify, he's going to have to unify these parties, unify the country to move forward.
Jen, thank you so much. Jennifer Zabazaja there with the very latest on Nigeria. Don't forget, we'll also be hearing a little bit later on, I'm looking forward to this interview, the Bundesbank President, Joachim Nagel. That interview, 1:30 p.m. London time, 8:30 a.m. in New York, and this is Bloomberg.
What about cryptocurrencies? Are you a believer in cryptocurrencies?
No, I'm not a believer in cryptocurrencies. And I would say that cryptocurrencies are a bubble. And I would describe cryptocurrencies as a limited supply of nothing. So to the extent there's more demand than the limited supply, the price would go up. but to the extent the demand falls, then the price will go down. There's no intrinsic value to any of the cryptocurrencies, except that there's a limited amount.
Well, based on what you've just said, why would you not put a big short of some type on cryptocurrencies? Or maybe you have, but do you think that's a good short?
Well, you know, when we look for these subprime, the reason why we shorted the subprime in size because it was asymmetrical. You're shorting a bond at par that has a limited duration that trades at a 1% spread of treasury, so you can't lose more than the spread in the duration. Yet if it defaults, you can make the par amount. In crypto, there's unlimited downside. So even though I could be right over the long term, in the short term, as the case of Bitcoin, you know, went from 5,000 to 45,000, you know, I would be wiped out on the short side. So it's just too volatile to short.
News breaks. No one covers the world like Bloomberg.
6 people have died from these latest quakes, adding to the 41,000 plus people who've died in those major quakes 2 weeks ago.
A top Sam Bankman-Fried associate said to be nearing a plea deal.
How does that help build the case for the prosecutors against Sam Bankman-Fried?
Biden is here to say we will stay with Ukraine until the very end, and that's really a show of support as well for the allies.
Bloomberg, your global business authority.
U.S. companies in China, frankly, are exhausted after 3 years of COVID zero.
The economy in many ways remains under pressure, especially the Chinese consumer.
I think the new government coming in, they may need some time to figure out how to run this big machine.
The majority of companies say they're going to stay in China, but they are challenged.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards and Matt Miller.
It's 10 a.m. in London, 5 a.m. in New York, and 6 p.m. in Hong Kong. Our top stories today. China bounces back. New economic data shows signs of a stronger recovery following the end of COVID-0 restrictions. In Nigeria, the ruling party's candidate has been declared the winner of the presidential election. Bola Tinubu will face a deepening fiscal crisis and widespread shortages of foreign currency and gasoline. And investors aren't buying what Goldman Sachs is selling. Shares fell after Goldman executives offered a glossy portrait of the firm's prospects. Questions remain about the troubled consumer unit. Welcome to Bloomberg Surveillance Early Edition. I'm Anna Edwards in London with Matt Miller in New York. Matt, a lot to talk about from the micro to the macro, but starting with the macro, the China picture, incredible resurgence of growth, it seems, there, ahead of ISM out of the US later.
Yeah, absolutely. I mean, yesterday we were worried about Xi's leadership and which way he was going to take the country. Today, it looks like the country is doing just fine, and that's helping futures to rise here in the U.S. We're looking at only slight gains, about 0.2% after the slight drop about the same amount that we saw yesterday in the last trading day of February. Of course, today we're kicking off March, so at least we're getting off on the right foot here. We do see the U.S. 10-year yield rising, but again, it's exactly the same level as it was 24 hours ago. So there's been a little bit of roller coaster action. It was up and back down. Now we're gaining 3 basis points, but still at 394.94, so just shy of 4%. A little bit of a tailwind in terms of the dollar coming off about 0.4%. We're at 12.49. We had been around 12.53, but we're still over 100 points shy of the peak, and maybe bets that the dollar is going to weaken are going to start to make money today. They've been wrong for, well, most of the month. Bitcoin itself up 2.6%, but still under 24,000, so 23,757. It's been a little bit lackluster in the trade after it approached 25,000 and has now come back down a bit, but with dollar weakness, you often tend to get Bitcoin strength, as well as with futures strength. Let's take a look at what's going on in Asia, because that's where the China data really shines, as you might expect. The overall index, the broader index, up 1.5%, but the Hang Seng gaining more than 4% in today's session or overnight, and it's pretty remarkable strength leading through to a weaker dollar, a stronger yuan. You see that here in the CNH, the offshore trade, and then the dollar also weaker against the Japanese yen. Right now you can buy 135.86 in terms of dollars to yen. What do you see in Europe?
Yeah, Matt, the picture in Europe then certainly being supported by what we saw in China. A big question, how much does that China strength read across into Europe and the US and the global narrative? Well, it's interesting that we did see a bit of a pickup from a negative futures picture here for Europe and in the US, actually, on the back of that China data. So although we're not, running away with ourselves with enthusiasm for the China data, and some people saw this coming, you do get a sense that perhaps it is underpinning the gains and managing to offset some of the concerns around higher interest rates. So we're kind of half and half in terms of sectors going higher, sectors going lower here in Europe, but overall markets are going a little bit higher this morning. One sector that really loved what we had out of China, that was basic resources. So this plays well for London, up by just shy of 3% on the basic resources equities sector. Allfunds Group, this is an investment platform business, and they were the subject of a potential takeover offer from Euronext. Well, Euronext has pulled that, and as a result, the stock down by 13.4%. The euro is up by is up this morning, up by 0.7%. It's a broader dollar weakness story with risk on in other assets. We see dollar selling, and that is playing well for the yen, the pound, the euro, all kinds of things, in particular the Chinese currency, going higher against the US dollar. But there's also a European concern around inflation here. Also worth noting that we've seen Italy forced to revise up its 2020, 21 and 2022 deficit estimates. I was just checking whether that had done anything to the Italian BTP market. Didn't seem to be moving it too much, but we'll keep an eye on that. Broadly speaking, we're seeing the euro going higher, and we're seeing yields going higher. We had already seen the Italian yield story pushing higher, along with France, along with Germany. After we got the French and the Spanish data yesterday on inflation, those came in hot. North Rhine-Westphalia came in hot today. The rest of Germany looks a little bit more mixed, but we certainly see some yield pressure continuing here for European markets then, Matt.
All right, well, we are getting headlines across from the Bundesbank right now. I just want to bring you these ahead of our interview later on today with Joachim Nagel. He said that he supports a more rapid reversal of the European Central Bank's bond buying to help tackle inflation. He said after the step that looks necessary for March, further significant interest rate steps might be necessary afterwards as well. So we're going to bring you Maria Tadeo. She is live at the German Central Bank, and of course Nagel's comments about what the ECB does, the broader European Central Bank. We're going to hear from him in an interview later on today as well. Let's get back, though, to China. The economy there is showing signs of a stronger rebound after COVID restrictions were abandoned. Manufacturing posted its biggest improvement in more than a decade last month. For more, we're joined now by Bloomberg's chief Asia economics correspondent, Enda Curran. So, Enda, what can we read from this, and how much can we read into these numbers? Are they legit?
Well, it's the first kind of decent reading we're getting on the post-COVID Chinese economy, and it's a good set of numbers pretty much across the board. Matt, PMI coming in 52.6, like you're mentioning there, strongest in over 10 odd years. Strength across the board within the components, manufacturing, employment increasing, services coming back on the back of a rebounding consumer. That's to be expected, but the industrial side of it showing improvement too, better than expected, in fact. And that's hinting at a rebalancing of the recovery in China's economy. We also had, by the way, data on the housing market today showing home sales increasing for the first time since back around mid-2021. So when you take it all together, it suggests that China's economy is recovering at a faster clip than anticipated. It's actually rebounding at a faster clip than it did back after the original lockdown in 2020. And it's certainly setting good mood music for the officials when they gather in Beijing from Sunday onwards for the National People's Congress that will basically set out economic policy for the rest of the year. So yes, question marks obviously always around the transparency around his data, and of course how long this rebound will last. But for now, at least, it suggests that the reopening has been positive.
Yeah, absolutely. So a really interesting take on what reopening has done to the economy. And this will no doubt feature as part of the National People's Congress meetings that are set to take place over the weekend and beyond then, Enda. Any clues in this data for what we should expect from the MPC?
Well, it's as good a mood music as they could have asked for going into it, and a lot of economists are expecting the officials to set a target of around at least 5%, if not higher. The messaging from the official sector has been all about growth in the economy this year, support for the economy. There's no hint of pulling back on that. That seems to be their focus. There are other agendas going on, of course, in terms of an ongoing consolidation of power under President Xi Jinping, but the overall narrative is one of support for the economy. It's expected to be a better year, and that's probably going to be the message coming out of the National People's Congress during next week.
Enda, thanks very much. Bloomberg's Enda Curran with the latest on China. So that ripples through global markets. Let's get to some politics. Bola Tinubu has won Nigeria's presidential election. The ruling All Progressives Congress Party got over 35% of the vote, with Tinubu set to inherit $167 billion worth of public debt when he takes over in late May. However, the election result may be challenged in court, with some opposition parties claiming the contest was in some way flawed. Bloomberg's Africa correspondent Jennifer Sabasaja has just returned from Lagos, and she joins us now here on set in London. Jen, we saw you there in Lagos covering these events. These results have been many days coming. Break down the results for us.
Yeah, Anna, I think the biggest thing to note at this point in time that this has really been the most competitive race that we have seen in terms of the presidency since the introduction of multi-party democracy in Nigeria back in 1999. So the fact that we did see the ruling party, the APC, win this election or be declared as the victor, we did also see two very close races between the introduction of the Labour Party, which was Peter Obi, who you can see there, put up a pretty good race. And what we heard from these two opposing, the opposition parties, is that they didn't feel that this was a legitimate race. They didn't feel like the counting was fair, and they might take it to court, as you mentioned. But significant in that this was really the first time we saw this competition. Also significant that we saw voter turnout really low, the lowest in a number of years. So a lot of things that people are pointing to at this point in time.
How is that possible, Jen, considering all the problems Nigerians face? We heard that they had difficulty removing any kind of cash from their own bank accounts. Wouldn't that push them out to the polls to vote for anyone else than who was incumbent?
I mean, you would think so, Matt. I mean, I think that's a fair assessment. But on the flip side, that also caused a lot of frustration for people even getting to the polls. I mean, being there on the ground, there was no cash, not enough cash for people to even, pay for gas, if there was gas, to get to the polls. And so the fact that there were 93 million registered voters, only 87 million people actually picked up their ballots. But based on the count, it was under 30 million that actually voted. And so from a lot of young people's perspective, the people that I spoke to, they're frustrated by this government. They were frustrated and hoping to see a new regime come in and step up, considering all the frustrations that they've heard. But earlier this morning, when Bola Tinubu was declared the victor, he actually appealed to young people to get on board with him, despite the challenges with the currency and with fuel, and hoping that he can potentially show them a brighter future for themselves. But honestly, a lot of promises at this point in time. Investors are really looking to see what actually goes into practice to turn things around.
All right, incredibly important as the biggest economy in Africa. Jennifer, thanks very much for your reporting. Bloomberg's Jen Sabasaja there. She was on the ground in Lagos. Now she's back in London. Let's get back to the world of finance, specifically banking. Goldman Sachs set out to reset the narrative at its investor day yesterday, but investors weren't having it. The firm's ambitious new targets and messaging whiplash over the future of its troubled consumer business underwhelmed the market. Goldman's president and COO, John Waldron, still struck an optimistic tone. He spoke with Bloomberg's Sonali Basak.
I would say it was an extremely productive and valuable meeting where our partners walked out of that meeting very optimistic about the future of the firm, very optimistic about the investments we're making in the forward of the opportunity of the firm, particularly in those two market-leading businesses.
Sonali joins us now for more. So, of course, Goldman executives talking their book, but the street said, we don't buy it, and sold the shares off the biggest drop that we've seen since their disappointing quarterly results.
It was actually the worst drop in the Dow, but conversely, JP Morgan was the biggest gainer. And I think that's important to note because a lot of the issues around Goldman has to do with the uncertainties around its consumer business. You have to hand it to management in the sense that, listen, they bought GreenSky just a couple of years ago. This was a more than $2 billion deal. It brought them into point of sale lending, but that comes with provisionings. So what does that mean now? When they gave you the path to profitability, the path to break even for that platform solutions business, it's still 2 years away. And so the question is, can investors be patient through that? They are considering all options, which means they could potentially sell a business like GreenSky, among other options they're considering. You know,
A big money-losing business, by the way. So they paid $2 billion to lose, what, $1.2 billion a year?
But the point here is that the consumer business has brought them a lot of deposits. And there are things now in that platform solutions business like transaction banking that helps them in other places. I think what's important to look at here, we know the consumer story now. It's confusing at Goldman. There are a lot of challenges. It's a down market. But what surprised me more was that when we asked them whether this was an incremental change or Goldman Sachs 2.0, they said Goldman Sachs 2.0 is our investment in investment banking, trading, and asset management. And so you can think about Goldman in those two ways very concretely, and then that leaves questions still about the consumer.
Yeah, Shonali, it does leave questions still then about the consumer business. Is the consumer dream finally dead at Goldman Sachs? If it is it the focus on those two other parts of the business that you referenced?
I think that the reasons that I gave about why they had kept and focused on consumer in the first place are really important to remember here because they have not cut the whole thing off yet. They have not decided to exit the entire business. They gave a time frame. The question now after the initial stock sell-off is, are they going to be able to talk to investors and continue on this strategy because it gives them deposits and other things. It gives them the benefit of lending. Remember, all the consumer bank stocks last year sold off more than Goldman, but they're coming back up this year. So I think you have to wait and see a little bit, Anna, because potentially there is still some benefit to be had from things like deposits, but potentially more for high net worth clients that tend to pair better with their wealth manager.
Right, not the basic consumer that they seem to be courting originally. Shonali, thanks very much for joining. Shonali Basak, who covered that extensively for us yesterday and did the interview as well. Let's get a look at some of the stocks we're following in pre-market trading this morning. There's some big movers with Novavax front and center. Said there's substantial doubt about its ability to stay in business at all through next year after it struggled to develop and sell a COVID-19 vaccine. As a result, you can see those shares in the pre-market down 24%. Then Rivian shares slumping as well after the electric truck makers' 2023 production outlook fell short of expectations amid supply chain snags. They expect to make 50,000 trucks this year. That's not as many as Wall Street analysts had anticipated. Stellantis CEO Carlos Tavares actually gave some negative news yesterday, cautioning that inflation could be triggered by a shortage of battery raw materials for the electric vehicles that they make if the U.S. IRA requires those materials be sourced locally. Nonetheless, the shares are up 3.7% in the pre-market. And HP shares also rising in the pre-market after the computer company reported its first quarter results and affirmed its full-year forecast. Anna?
Coming up on the program then, Matt, we'll talk to Ruqaiya Ibrahim, Daily Insight strategist at BCA Research. What does she think of China? Does she focus on the challenges for China? Is she focused on the opportunities around the reopening story? And the road ahead for Tesla also in focus. Elon Musk lays out the company's master plan during today's Investor Day. He has a lot of businesses on his plate these days. Plus, the Bundesbank is out with its annual report, also giving us their take on the Bundesbank president, Joachim Nagel, also giving his take on ECB policy, bond buying. He would be in favour of a more rapid reversal of the ECB's bond buying programme, so further into QT more quickly, seems to be the message from Nagel. Also, could see more big ECB rate hikes as being possible. Those are the lines coming through from the Bundesbank this morning. We will bring you more later this hour with Maria Tadeo, who's reporting from the Bundesbank in Frankfurt for us, and you can catch Maria's interview with the Bundesbank President, Joachim Nagel, at 8:30 a.m. New York time, 1:30 p.m. in London. This is Bloomberg.
We had a long-standing presence here in Houston for the past, I would say, 20-some years, since the Compaq merger. We bought a piece of land, we started building this building. And in doing so, we had to also recalibrate how we were building it because the pandemic hit us. And we thought about recreating a work environment that is very, very different, that is catered for this new structural way of working, which we call edge to office, where people don't always come to the office to work, can work remotely from their homes, their edges, but have to come back to the office for specific reasons, such as team meetings, customer meetings, and in general, collaboration.
With regards to the hybrid work model, do you see that as something that will persist longer term when the pandemic is long gone?
Yes, no question, this will persist.
News breaks. No one covers the world like Bloomberg.
6 people have died from these latest quakes, adding to the 41,000 plus people who've died in those major quakes 2 weeks ago.
A top Sam Bankman-Fried associate said to be nearing a plea deal.
How does that help build the case for the prosecutors against Sam Bankman-Fried?
Biden is here to say we will stay with Ukraine until the very end, and that's really a show of support as well for the allies.
Bloomberg, your global business authority.
Welcome back to Bloomberg Surveillance, the early edition. I'm Matt Miller in New York with Anna Edwards out in London. And we have been getting headlines across the terminal from Joachim Nagel of the Bundesbank, of course, the biggest and most important part of the ECB, I guess, in terms of the national banks around Europe, saying that QT really needs to speed up a little bit, or indicating that he believes that quantitative tightening right now is expected to begin in June at a very slow pace, $15 billion a month of passive roll-off. At that pace, it would take 30 years to reduce the ECB's $9 trillion balance sheet. Not that they necessarily want to get it down to zero, but joining us now is Noor Al-Ali, Bloomberg Markets Live editor. Noor, as we talk about higher and higher, more and higher rate increases, right? 50, maybe 50 again, maybe 50 again for the ECB, getting us to 4%. Why don't they speed up QT as well?
Well, I mean, if you think about it, really, Matt, it's a question of just how much can bonds handle. You know, there's incredible amount of pressure already. You know, we've had the ECB raise rates aggressively, and they're saying that they're going to continue to be aggressive in their tightening cycle, mostly because they are fixed, on getting their inflation target back to 2%. We know that core inflation is quite elevated. It's above 5%. Bloomberg Economics expects it even to tick higher when we get that data tomorrow. And that, to be honest, is quite a lot for traders to digest. I know we've been pricing in higher rates and for longer, particularly in the euro-dollar curves. But also now we need to consider from a central bank perspective how their actions are going to impact countries on the periphery. We've seen Italy revise their deficit figures for 2020, 21, and 22 as well. So there's a lot that's going into the fray here.
Okay, and Noor, good morning. I wanted to ask you about oil prices because we seem to have got stuck. I mean, low 80s to mid 80s is where we trade on Brent for recent weeks. And then we get this Chinese data that seems to at least excite basic resource stocks, and some commodities went higher, but oil not so much. What's going on here?
Absolutely, because, you know, China in general is the biggest buyer and the biggest consumer of commodity products, particularly oil as well. They used to snap up a lot of their oil products from Saudi Arabia, but when you've had the Russian sanctions come into place, you know, there's been a lot of talk on whether or not these Russian supplies that are sort of outside the complex of supplies that we know are agreed on, because now they're sanctioned by Europe, going to Indian buyers, going to Chinese buyers. The floor that's been set for oil prices have been there largely since November. We've seen to be honest, a range-bound trading for oil, whether it's Brent or WTI, and I expect that to continue to be the pace until we get some form of catalyzation into place. We know that OPEC is meeting in June. They've said that they're not revising their output, so there's a lot that's going into that mixed outlook.
Noor, thanks very much. Bloomberg's Noor Al-Ali joining us there from the Markets Live team. And for further market analysis, check out the Markets Live blog. MLIV Go is the function to use on your Bloomberg terminal. This is Bloomberg.
You've got to explain this one to me. What does it mean when the White House says we're watching markets carefully?
It means they have a Bloomberg.
I've seen the Bloomberg.
They have.
I've been in and seen it.
Lots of Bloombergs. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg. Lots of Bloomberg.
I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. I've seen the Bloomberg. What does it mean? What does it mean? What does it mean? What does it mean? What does it mean?
It means they have a Bloomberg.
Seeds, typically between the time you start and they get out in the farmers' fields, is about 8 years. Now we have a pipeline of innovations. We've been funding the CG system for 20 years now. It's funded at about $1 billion a year. If people care at all about adaptation, that thing will be funded at $2 billion a year. I mean, there won't be anything close to the impact of climate-related seeds, climate-related maize, rice, wheat, sorghum, millet. And thank goodness, because of human genetics, we know how to do the editing. Thank goodness, because of AI, we know how to find the alleles. Because of drones, we can measure stuff in the field. So there's huge advance in terms of how the whole seed ecosystem moves at full speed.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Now keeping you up to date with news from around the world, here's the first word. In northeastern Greece, at least 32 people have been killed in a train crash. 85 others have been injured. Authorities say a passenger train collided with a freight train just before midnight, starting a fire. The passenger train was traveling between two popular tourist destinations, Athens and Thessaloniki. Lori Lightfoot has become the first mayor of Chicago in 40 years to lose a bid for re-election. She finished third in Tuesday's election. An April 4th runoff will pit former Chicago schools chief against the Cook County commissioner. This is Bloomberg.
talk to us maybe about like how important data targeting or targeting of an audience actually is? Because I think we hear these things like, oh, it makes it harder for advertisers if they're not able to track your data. Why is that so important? And like, can you maybe give us some numbers around how valuable a targeted ad is versus an untargeted one? I don't even know if untargeted ads exist on the internet.
Oh yeah. Well, and just on to sort of add on to Tracy's question, like let's say I go to golf.com. Yeah. Okay. The ads that I get, like how much is it? Oh, he's on golf.com. He probably wants to read about golf, as opposed to ads that I get that maybe, you know, the last 10 sites I went to is like pets.com or something like that. Yeah. And so how valuable is it for golf.com to be able to know that I also like pets?
I mean, there's all sorts of open and unsolved questions about the value and precision of online advertising. The classic example is like you go and you buy a pair of sneakers and then all you see are ads for the same exact sneakers, like just following you around the internet, right? It's like, I just bought these. Why do you, like the world's biggest tech companies that so supposedly know a lot about you, like can't solve that
You bought one pair of sneakers, you must
you
want
might want
more.
another one, right?
Well, I do, but I definitely don't need a second stone.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. China bounces back. New economic data shows signs of a stronger recovery following the end of COVID-0 restrictions. In Nigeria, the ruling party's candidate has been declared the winner of the presidential election. Bola Tinubu will face a deepening fiscal crisis and widespread shortages of foreign currency and gasoline. And investors aren't buying what Goldman Sachs is selling. Shares fell after Goldman executives offered a glossy portrait of the firm's prospects. Questions remain, though, about the troubled consumer unit. I'm Anna Edwards in London with Matt Miller in New York. And Matt, a lot to talk about when it comes to the Chinese story overnight, building our way towards US manufacturing ISM print later on today.
Yeah, absolutely. I mean, the China story really is front and center. It's driving, you know, local equities, indexes, and assets a lot more than it is here, but it's trickling around the world. We see gains in S&P futures now. They're slight, only 0.3%, but that offsets the losses that we saw in yesterday's cash trade, so we're back at an even level. The same is true when you look at the 10-year. We were up yesterday. I saw 396 and change at one point, and then down. Now we're coming back up 1.5 basis points, but still at 390, 357, so still short of where we were this time yesterday morning. The dollar index also coming down right now at 1248.56, and in a minute you're going to see the Asian currencies against which the dollar has fallen, but that really creates a tailwind for stocks. Maybe the first trading day of March will be a better one than the last trading day of February. Bitcoin up about 2.5%, but still under 24,000 at 23,723. So Bitcoin coming back a little bit, but not getting as close to 25,000 as it was a few sessions ago. Take a look at what's going on in Asia. The Hang Seng Index is really where you want to focus. Oh, sorry. I always go straight to Asia again in the second half as we do in the first half. But just so you know, the Hang Seng Index was up 4% overnight, and that was the biggest gain since December of 2022. So it's been a while since we've seen that kind of gain. In terms of pre-market movers, Novavax has said they may not have enough money to go on through the rest of the year, next year. So this troubled COVID-19 vaccine developer down 23% in the pre-market. Rivian is also taking a hit in the pre-market, off 8%. The electric vehicle maker said it's going to produce 50,000 Rivians this year. That's less than Wall Street expected, and it missed revenue expectations as well for the most recent quarter. Stellantis had a bunch of bad news actually out, saying that inflation is going to hit battery costs. French car registrations fell 9% in change, while its crosstown rival at Renault had registrations up almost 20%. Nonetheless, the stock is up more than 3%, 3.5% to start the pre-market trade today. And then HP up 1.6%. Out, the computer maker, saying that this year could be better, and you know, computers have had a really tough time with the PC glut, the chip glut there, as we saw a shortage everywhere else. So maybe a better day for HP than it has been a year. Anna, what do you see in terms of Europe?
We see that the Chinese story is working its way, as you say, into some of the global markets. We have got the basic resources sector, the mining sector, Matt, doing really well this morning. That's helping to cushion the negatives around Europe and the higher yield environments and the fears about higher rates. So Stocks Europe 600 up by just 1/8%, though, so paring back from earlier gains. All Funds Group, this is an investment platform business. It had been the recipient of an intended offer by Euronext. They've pulled that bid, and so as a result, the stock is down by 13.4%. Could there be others, though, in the works? Euro is at 106.55, up 0.8%. And Matt was rightly pointing out that we've seen weakness in the dollar. It's pretty broad-based. Some of the Asian dynamics driving that as well, with strengthening of the Japanese currency and the Chinese currency, crucially after that Chinese data. But this is also being driven by what's going on in Europe in terms of inflation. The French and the Spanish data of yesterday coming in pretty hot. Parts of the German story looking hot. Other parts of the German story looking a little bit more mixed. And we certainly build our way towards a fuller picture of Eurozone inflation tomorrow. As we wait for that, though, the market reassessing its estimates of just how quickly we see tightening from the ECB, or at least how long we keep tightening at the ECB and how high we get to. So that is pushing the euro. It is also pushing yields higher in Europe. The German 5-year yield on the move, as you can see here, 2.8% is where we stand right now. Joining us now, talking of German yields, talking of all things German and the fight against inflation, we are joined from the Bundesbank in Frankfurt by Bloomberg's Europe correspondent Maria Tadeo. Maria, the head of the Bundesbank, Joachim Nagel, was speaking a little bit earlier. The hawk we have come to know from the Bundesbank seems to still be in residence. What were some of the highlights?
Yes, Anna, you know, I came in handy. You're talking about Germany, and I am at the Bundesbank. Mr. Nagel is still obviously briefing reporters, but this is a publication of their annual report. And just to run you through some of the highlights that the German Central Bank has put out here. When it comes to GDP, they say that in Q1, they still expect a contraction. They say for the time being, there is no pickup in the German economy. There is no signs of major improvement, and they'll have to wait, or Germany will have to wait until the back end of the year to potentially see the economy building momentum. Obviously, anything to do with the German economy is important when it comes to the sentiment of the euro area, because this is the biggest economy, clearly. When it comes to inflation, check the language here in this report. It says in 2022 will go down in Germany's economic history as a year of one of the highest inflation rates since the foundation of the Federal Republic. It's a big headache for the central bank, but as Matt knows very well, it is also a political headache. Now, they expect for this year an average rate between 6 to 7%, and they also say, and this is interesting, that yes, energy prices have come down. That may be positive in the short term, but it may not be enough to bring down inflation on the medium term. So perhaps suggesting that some of the forces have become more entrenched when it comes to inflation.
Yeah, the hyperinflation entrenched in the German psyche. They feel genuinely uncomfortable when it comes to inflation. We have seen repricing of rates this week, the highest, I think, Bund quote that we've seen since, well, 15 years ago. What's the Bundesbank's take on that?
Yes, and Matt, I'm not sure if you agree, but to me it seems the zeitgeist once again is changing this week. We've seen the repricing to 4%. We've seen the inflation prints coming in hotter than expected. There is an ECB decision that is coming up in about 2 weeks. Well, I'll be back in Frankfurt for it. Now, so far, the German Central Bank seeing that it's obvious the final hike, the last hike, will not be in March. And beyond that, there may be need, or quote, a need for a significant hike beyond that. Of course, whether that is an endorsement of another 50 basis points, we're going to ask Mr. Nagel himself, because we'll be speaking to him in a few hours from now.
Okay, I have it on good authority that Matt agrees with you, Maria, which is always nice. He also says that it would, Nagel says, it would be a grave error to slow or halt tightening early. So certainly something that I know Maria will pick up in her conversations with him later. You can catch Maria's interview speaking with the Bundesbank President, Joachim Nagel, at 8:30 a.m. New York time, 1:30 p.m. in London. Joining us now to talk markets, Ruqaiya Ibrahim, Daily Insights strategist at BCA Research. Ruqaiya, I wanted to start with what we've heard overnight coming through from China, because this did seem to, well, certainly lit something underneath the Hang Seng, and the Hang Seng Tech Index up by 7% at one point. And we've got a few things going on here. We've got the reopening story, of course, post-COVID, and also expectations of a change in politics around clamping down on some of those tech firms that was so much talked about a few years ago. What are your expectations for China and how that spreads globally?
Well, I think that the fact that the Chinese PMI came in strong is not surprising. At the end of the day, China is reopening, economic activity is reaccelerating, and the government is increasing their stimulus measures. So we shouldn't be too shocked that activity is improving. But I think what's more important is really that I think investors are likely over optimistic about the longer term outlook for the Chinese economy. There are still headwinds that are facing the Chinese economy. You mentioned tech stocks. In this sense, the fact that China and the U.S. have there are strategic tensions between China and the U.S. Poses a risk to these tech stocks, because these companies, they hold big data, and at the end of the day, the Chinese authorities do not want this big data to be in the hands of the U.S. government and U.S. investors. And so I think that Chinese authorities are going to most likely attempt to gain greater control over these tech companies.
Okay, Ruqaiya, that's interesting, because back in 2021, I remember it was very fashionable to talk about whether China was uninvestable, and that was for a number of reasons. It wasn't to do with COVID policy particularly back then. It was to do with the things that you're talking about there, about the clampdown on tech. So as we watch these gains post-COVID, what should we expect to see in terms of returning to previous valuations or levels with Chinese assets?
Well, I think over the coming months, there are going to be positive surprises like we saw today in the PMI data. And we are also coming up on the National People's Congress that starts in a few days. And so that could also be a source of upside news for the Chinese economy. And that could support Chinese risk assets over the near term. But over the longer term, there are still headwinds that are going to weigh down on the Chinese economy. For example, the global manufacturing cycle is still in a downturn. If you take a look at, for example, South Korean exports that came out just earlier today, that showed that they declined on a year-on-year basis. Again, manufacturing PMIs from the Eurozone, and so far the flash PMI from the US, will get the update later today, but those are still in contractionary territory as the end consumers are still normalizing their consumption of consumer durables following the pandemic binge. So I think that these are factors that are going to weigh on the Chinese economy, in addition to this, the headwinds facing the tech firms that are due to the structural long-term tensions between the U.S. and China, which are not going to fade anytime soon.
We heard Ruqaiya from Wei Li yesterday at BlackRock. She said equity markets are not pricing in the macro challenges ahead. We heard from J.P. Morgan's Marko Kolanovic yesterday. He said that equities are overvalued and at a risk of further losses because the divergence from bonds hasn't closed yet. We're just hearing from a lot of people. Cliff Asness, I think, said that the equity market really hasn't priced in inflation that's here to stay and a central bank that is determined to quash it. Do you agree?
I do. If you take a look at, for example, the equity risk premium, that's very low. And that suggests that, equities are not pricing in the risks of a tighter Fed, a tighter ECB that are pushing rates further into restrictive territory. And as you mentioned earlier, the data that we got recently from Spanish, French inflation yesterday, we're going to get the German inflation later today, the Eurozone inflation tomorrow. These are all so far pointing to inflationary pressures that are still persisting, and it seems that that's pushing central bankers to continue hiking interest rates deeper into restrictive territory, even potentially inducing a policy error in the ECB, which would be very negative for equities.
Right, 4, 5, 6 is a string of numbers I've heard recently a lot to refer to the ECB, the BOE, and the Fed terminal rates. Does that make sense to you?
I think that I think the data that we're seeing so far is pointing to higher terminal rates. And I think that, what the message from central bankers is that they're willing to tell us, for example, President Christine Lagarde is willing to tell us that she's going to hike by, or the ECB is going to hike by 50 basis points in March. But then after that, they're going to be more data dependent. And the data that we're seeing so far suggests that there is a risk that they're going to hike further. And so that's ultimately going to push up the terminal rates, reduce the likelihood of rate cuts from these central banks at the end of this year. And I think that, this is something that we're going to have to deal with over the coming months until there are clear signs that inflation is rolling over. So that's going to continue to be the story in the meantime.
Ruqaiya, thank you very much. Ruqaiya Ibrahim of BCA Research. Speaking of the Bank of England, just hearing from Andrew Bailey earlier this hour, cautioning markets against assuming a rates move in either direction. So that's not clear. Right, coming up, Goldman's Investor Day pitch is falling flat, with investors. Part of our interview with the bank's president and COO, John Waldron, next. This is Bloomberg.
So intimately linked to the future of the UK. What are you seeing when you go to branches and in the country?
Yeah, we're seeing a lot of anxiety at the moment. I think the recovery from the pandemic has been and is continuing to be very strong. So I think we're seeing the economy recover. But with rising interest rates, with inflation, those are things that peoples and families and businesses haven't had to deal with for 10 years. So a lot of business owners today haven't had to operate in that environment. So it's causing quite a lot of anxiety, which means for us, because we're up and down the country in branches and offices, we can spend a lot of time talking to businesses and helping them plan and deal with it. But it is, it's very different, and it's not something people have had to operate in for a long time.
Manage being the foreign minister, the prime minister, and the head of QIA at the same time? Doesn't that take a lot of time?
I was working sincerely more than what I should do, and if it's a candle, it will be burned by now completely.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in New York with Anna Edwards in London. Now, Goldman Sachs President and CEO John Waldron says the bank's partners are firmly behind its strategy as it contends with losses in its consumer business that have dented investor confidence in the firm. Waldron spoke with Bloomberg's Shonali Basak at the bank's Investor Day in New York City.
Well, we said earlier today to our investors that we, for the first time in 4 years, were able to bring all of our partners together for an offsite. We had many versions of that during the pandemic, but we couldn't get everybody together given the obvious travel restrictions during the pandemic. So for the first time a couple weeks ago, we were able to get everybody together. And I would say it was an extremely productive and valuable meeting where our partners walked out of that meeting very optimistic about the future of the firm, very optimistic about the investments we're making in the forward of the opportunity of the firm, particularly in those two market-leading businesses. And then, like many others, have questions about how long will it take to drive platform solutions to profitability. So certainly those questions come up. Some of those questions spill out into the press. But I think if you looked at our partnership and you walked around and interviewed our partners, they are firmly behind the strategy, firmly behind the opportunity and very excited about what's in front of us at Goldman Sachs.
I have to go back to a prior question because I feel like I still need an answer. Do you think that when it comes to the asset management business that you can do something transformative at this phase, especially given when you look around the markets that they've sold off so much?
Well, if you look at our strategy and you listen to what we said today to our investors, we have plenty to do organically. We have significant opportunities in front of us to drive wallet share and grow financing in our banking and markets businesses. That's an organic strategy. In asset and wealth management, we have significant opportunities to drive management fees. We have significant opportunities to continue to invest in our platform operationally and to grow our wealth management business. All of those opportunities are organic. We can always look for inorganic opportunities. We have, as you know, we've made acquisitions. We bought a business last year in Europe called NNIP, which has added substantially to our European footprint in active asset management, has given us very interesting ESG capabilities across our asset management platform. There are always things we can look to do, but our appetite right now is most interestingly driven by the organic opportunity.
John, I can't let you go without asking about the broader macro environment here. You know, just rate expectations have changed drastically in the last couple of weeks. How has it changed the calculus among your clients for risk appetite? How has it changed the calculus for you for risk appetite?
Well, I would say if you think about what was going on at the end of last year, there were significant concerns in three primary areas. One was the European energy crisis, two was China and zero COVID, and three was the performance of the U.S. consumer. In all three areas, things have broken to the high side. We didn't see the energy crisis that everybody predicted, maybe somewhat driven by warmer weather, but it didn't occur. And so the European situation improved. Nobody predicted that the zero COVID policy would pivot very quickly to opening up China largely completely. That has changed materially. That's a much more significant upside surprise. And the U.S. consumers outperformed.
John Waldron, Goldman Sachs President and COO, speaking with Bloomberg's Janali Bastak yesterday, and Matt talking about the business, also giving his views on the macro picture. But on the business, I was taken by one of our colleagues writing for Bloomberg News saying that investors felt they had, or analysts felt they had, messaging whiplash at yesterday's event. When it came to the consumer business, what is it exactly Goldman's is going to try to achieve? How big will it be in the future? Seems to be one of the unknowns.
Yeah, absolutely. They didn't seem very clear about that. I also thought it was interesting. You just heard John say you had questions from their partners spill out into the press. And one of the concerns is that this bank just isn't transparent enough. They're concerned about leaks, and investors want information to be very clear and accessible. So it seems like Goldman really needs to come to terms with that.
And this only the second investor day to sort of underline that point. Right, coming ahead on the program, the road ahead for Tesla. Elon Musk lays out the company's master plan during today's investor day. So we go from the Goldman's investor day to a Tesla investor day. More on what to expect next. This is Bloomberg.
Did art conservation help you in any way to be a better investor? And should a lot of good investors learn how to be an art conservator as well, or not?
I think in conservation and art history and liberal arts, I think differently than a lot of people that have just done finance. And also, I think I mentioned one of the things is to do conservation, you have to really do a lot of work, pre-work, before you actually do a treatment. And so a lot of that pre-work is very similar to what I do in due diligence. for investments. You know, lots of testing, lots of thinking about what could go wrong, lots of research. You know, when I was an art historian, that was in the old days before the internet, but you'd sit in the stacks and you'd pull one thing in a bibliography on this and you'd sort of, like a mosaic theory, put all these things together. I feel like I do that in my due diligence.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in New York with Anna Edwards in London. Now let's take a look at what's ahead today. At 8 a.m. Eastern, we get inflation data out of Germany. We have Maria Tadeo standing by at the Bundesbank, so in case it's crazy, we'll go live to her. At 10 a.m., U.S. ISM manufacturing figures come out, and ISM data is something that, for example, John Farrow looks very closely at, so we will highlight that. U.S. retail earnings continue with Lowe's and Dollar Tree after we've already had Walmart and Target, as well as Home Depot. And then Tesla holds its investor day later today. Elon Musk will pry himself away from Twitter and unveil his master plan part 3. Plus, hopefully, we get an update on the Cybertruck. Anna, I've been waiting for the Cybertruck. When will we see the Cybertruck in real life?
Well, shall we ask Craig Trudell?
Yes.
If anybody knows, he will know. Craig Trudell, Bloomberg Global Autos editor, joins us now for a preview of Tesla's Investor Day. You can answer Matt's question, Craig, or you could answer, and you can answer what we expect from today.
I know as little about the Cybertruck as anybody else. Lord knows when they're going to have this thing finally ready. It absolutely is one of the things that Tesla's biggest fans are anticipating, have been since we saw this thing, several years ago now. But there's also, hopes for a robo-taxi at some point. That's another thing that years ago, actually, when we talk about master plans, part 2, remember Musk talked about, going into every segment, having, trucks and buses. We have a semi that's just barely started deliveries. We don't have the robo-taxis he promised. We don't have the self-driving capability that he talked about. So we also have to kind of consume today's headlines with some grains of salt.
On the other hand, Craig, at the end of last year, beginning of this year, we were worried about demand issues at Tesla. Now we see they're ramping up production of the Model Y. And I heard from AMLO yesterday that they're going to build a whole new factory in Monterrey, Mexico. So production is going to be boosted.
Yeah, and I mean, let's take a step back and think about last year too, right? Where they opened 2 factories. They were only making cars in 2 factories in the world, one in California, one in Shanghai, and boom, in 1 year they have another in Texas and in Germany. Now we're talking about a plant going up in Mexico. Indonesia has talked about courting Tesla and wanting them to build a factory there. So absolutely, we can expect a lot of talk about expansion, about more capacity. This is a company that has a sort of moonshot goal of making and selling 20 million cars a year by the end of the decade. Yeah. I think a lot of people would take the under on that, but of course, they also have exceeded expectations going back many years in terms of what the industry thought was possible.
Just briefly, Craig, he's the richest man again, Elon Musk, thanks to Tesla share price recovering quite a lot in January, stalling in February. Just briefly, is he back in focus on Tesla? He's got a lot of other businesses to focus on.
I think he also has his hands full with Twitter, but I think, if there's been something that he's been more effective at lately, it has been sort of getting his message out about Tesla, even as he's been up to his usual shenanigans on the social media service he owns now.
Craig, thanks so much. Bloomberg's Craig Trudell with what to expect and how to read it from the Tesla Investor Day a little bit later on today. That is it for early edition. Surveillance is ahead. Tom, John and Lisa, they'll be hearing from David Rubenstein of Carlyle Group, among other voices. We've had that Chinese PMI data coming in higher than had been anticipated. We'll look ahead to the ISM. This is Bloomberg.
Starbucks for a moment. You've been on the board for how long?
Wow, a long time, since 2006.
Okay, and when you got on the board, did you have to go to Starbucks every day and
I go to Starbucks a lot.
And
yes.
when you check in, do you have to wait in line like everybody else?
Yes, I wait in line like everyone else. That's an important part of the process, to see how everything's working, how long it takes, what's happening in the store. I take pictures of the cases. I do all sorts of things when I go in now.
So what's your favorite drink, can you say? Is that a state secret?
I make a joke about this. So I like my coffee black like me.
Okay. Now, Howard Schultz has been a mentor to you a bit. Is that correct? He's the founder of Starbucks.
Sure, for sure. Very important.
So what did he do that made Starbucks so successful? There are other coffee chains around the world, and it wasn't like he invented coffee chains. What did he actually do that made it the biggest in the world?
He really started off from the very beginning saying that he wanted to create a different kind of company, and that he had this point of view about leading through the lens of humanity. It sounds like it could be a cliche, but it's not at all. It is very much in the DNA of the company, how we look at things, how we do things. It's always through this point of view of people. And so at the end of the day, I think he put people first, not only in terms of the partners of the company, but also in terms of the customer. And at the end of the day, that is what has made the company so great.
Welcome back to Bloomberg Daybreak Europe.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets, trying to open.
This is Bloomberg Technology.
To our television and radio audiences worldwide, welcome now to Balance of Power.
This is Bloomberg.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Countdown to the Close. Welcome to Bloomberg Crypto.
Monetary tightening is not taking a bite out of the economy. This is bad news for inflation and bad news for the markets.
At some point in the future, we will see inflation coming back down to target.
We think that headline inflation is going to fall back to around possibly just under 3.5% by mid-year.
There's no sector of the economy that really is hurting.
This is an environment with very heightened macro and market volatility. We have to change our views very quickly.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Where did February go? Hello, March. Live from New York City this morning. Good morning for our audience worldwide. This is Bloomberg Surveillance on TV and radio. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Farrow. Let's get straight to this market, up about 1/3 on the S&P 500 as we get this morning started. TK, I think we have to begin in China. Upside surprise after upside surprise in Chinese data. Our latest reporting this morning suggesting that Chinese leaders are surprised by how well things are going as they reopen this economy.
I read the notes. John, this has happened 14 times before. I'm going to say back to 1968, but let's go back to 1978. It's all about property. They can't let property collapse. And what I saw within the reporting of Bloomberg today is it's not that there's going to be a property bailout, but they're going to move forward. And that's where you come to the 6% GDP estimates we keep hearing on Bloomberg.
Were they
surveillance.
reopening the economy after a pandemic in the 70s? Is that what happened?
I think that their solution is the only investment they have is property. And the bottom line is, everything said and done, property can't fail.
You saw Wei Li at the opening of this hour of BlackRock. Wei Li's looking for 6% GDP growth this year, and then Lisa ultimately looking for that to slide towards the 3s in the following years. And that's going to be the story. That's the tug of war.
And that's really what I wanted to highlight, that perhaps the authorities in China are celebrating this incredible data. Look at the reopening, but how much is this a messaging exercise at the same time that you have companies moving out of China if they can? And really, you're hearing about that more and more, especially with what we saw in Washington, D.C. yesterday.
So data good in China, under the radar, hardly being discussed today in China with Xi, Lukashenko of Belarus, Tom.
It's
Russian
there,
ally.
but you're right. It's an afterthought.
So if you're in this market, you've got a decision to make. Data's great. Do I want to be invested in China directly? Or do I want to go through China proxies and trying to avoid, basically, this tension between the United States and China at the moment because of what's happening with Russia and this war in Ukraine?
Yeah, I'll go with that. But I'd also say the traditional way to invest in China is through multinationals. And the optimists out there looking at the glass half full are saying we're going to get through this. We're going to get new data. We're going to get disinflation. And we're going to get, you know, some form of life goes on. And that will be multinationals like Apple doing business with China.
That's the China data. We get some US data a little bit later on this morning. Lisa's going to go through the day ahead in just a moment. Your market looks like this, up 1/3 on the S&P 500, a lift after the losses of last month in February on both the NASDAQ and on the S&P 500. Outside of the equity market, yields are a little bit higher, 393 on a 10-year. Tom, we've just been sitting here in and around 390, staring down the barrel of 4% over the last couple of weeks.
George Saravelis at Deutsche Bank, yes, on foreign exchange, but writing a more elegiac note this morning and just saying the next 2 weeks are absolutely critical. And you see that in the spread market, what the pros watch, John, 2 yields and the difference between them. I walk in this morning. I mean, I know you get in later, you get in at 5:52 or whatever it is. But the bottom line is I come in today and we got essentially a record vanilla 2-10 spread.
So we share the true story. I'm approaching the entrance of Bloomberg this morning and Tom shouts out, don't do it. Don't go in, don't do it, don't do it. And I think I badged in before you by about 10 seconds. But anyway, whatever. Futures are positive, Bramo, up 1/3. Ton of data coming up a little bit later.
So that's basically the goal, to get in just before the other person, but not early enough that you can get there when I get there. Just saying, retail earnings do continue today. We get Kohl's, Lowe's, and Dollar Tree before the bell, American Eagle after the bell. Of course, Macy's and Costco all on deck later in the week. How much do we start to see a resurrection of some of the names that have done really badly this month? Year to date, there's been a lot of positive gains. Kohl's up 11%. But last month, in the past 30 days, you've seen it down about 15%. The volatility has been incredible. At 8 a.m., this to me might be the most important data point of the day. German CPI for the month of February coming out at a time when you have the Bundesbank saying they expect inflation to average 6 to 7% over the entirety of this year and possibly not get back down to 2% next year or even the year after that, at a time when they want to accelerate how much the balance sheet gets wound down. These are some of the debates that could be potentially turbocharged by the data that we get out today, with the 2-year yield over in Germany at the highest levels going back to 2008. And at 10 a.m., we get the other most important data point of the day, which is the U.S. ISM manufacturing data for the month of February, as well as prices paid for these manufacturers. Do we see any increase in some of the momentum in the manufacturing sector after what a lot of people thought was a manufacturing recession, John? This is the conundrum for the market. What if you get some sort of recovery in manufacturing just as you start to make progress in diminishing some of the inflation stemming from the services side of the economy? This is the push-pull of an asynchronous recovery.
Lisa, well said. As always, Lisa, thank you. The day ahead with Bramo there. Let's get straight to it with Jeremy Stretch, the head of G10 FX strategy at CIBC. Jeremy, Lisa was just going through the data that comes out a little bit later. I think I want to start with the ISM manufacturing in the United States. We had this robust read on the US economy in January. Big question we've all got is whether February confirms just some of that. Do you expect it will?
Well, I think we are going to see a modest improvement in terms of that manufacturing ISM print, but I'm not sure necessarily we're going to be getting back to an expansionary environment just yet. So I think we still have some headwinds, and I think we will be not only watching that headline number, but also looking at those particular components in terms of prices paid as underlined, and also the employment backdrop, because of course employment isn't coming out this week, so we have to wait for another week or slightly more than another week until we get the non-farms report. So I think we can and should see some sort of stabilization in terms of the manufacturing backdrop, but I'm not sure necessarily we're going to see enough momentum despite that payrolls blowout from January to point towards an uptick in terms of manufacturing sentiment just yet.
Jeremy, I am very interested from your purview of foreign exchange. What do you think of the bond market and what the spread market and inversions signal? Do they signal crisis where we go disjoint or have jump conditions, or do they signal some form of normality?
Well, that's a very good question, and I think certainly when you look at the history of those yield curves, and you can signal this or see this significant degree of inversion, particularly in that US curve, and whether you think that is signaling a real dislocation in terms of economic activity ahead, or whether you think the markets perhaps are becoming have got a little bit ahead of themselves in that particular context. And I think the degree of inversion probably does overstate the downside risks in terms of the macro outlook. We're cautiously of the view that the market is perhaps pricing in a little too much for the Fed because of the sort of the resilience that we've seen into the turn of the year, and we may not see that being maintained, and we see some of those inflationary pressures start to diminish. But I think in the context of the upcoming data releases, and going back to where Lisa was underlining the key events of the day, then I think that that German yield curve, I think, is going to be very instructive, because we are going to see further inflationary pressures, and that's going to keep Eurozone terminal rates well supported, and from an FX perspective, probably keeps Euro-dollar well underpinned as well.
So let's talk about that. That's exactly where I wanted to go. What the market is pricing in right now is significant. A 4% ECB terminal rate at a time when you have inflation running at the fastest pace in decades in modern history in Europe. How much have we priced in the upside surprises that could potentially come from today's CPI data or tomorrow's Eurozone broader read?
Well, I think if we go back to yesterday and we saw the reads from both French and Spanish HICP, those were both of those releases came in on the top side, and the Spanish number was particularly disappointing in the context of the reduction in administered prices that we'd seen. So it does look as though all roads are pointing towards a higher German print than the market's anticipating, and probably also in terms of the Eurozone metric tomorrow. And I think most importantly, we should look beyond just the headline read, but also focus much more on the core number. And I think that's going to be something which is going to become much more relevant for the ECB policy narrative going forward. We saw some comments from Philip Lane earlier in the week regarding the importance of core prices once you strip out food and energy. And those are already at cyclical highs. And if we were to see another uptick or a move higher in terms of core prices, then that's going to only amplify the degree of pressure on the ECB to tighten policy further. And of course, that potentially starts to raise issues, and particularly uncomfortable issues in terms of the context of the ECB, in terms of those fragmentation concerns once again.
So, Jeremy, this is where it stands. We've had about 300 basis points of hikes from the ECB. They were at -50 on the deposit rate. They're now at 250. Goldman Sachs came out a little bit early this morning, and they now think that the terminal rate, the peak rate of this hiking cycle, will be 375 at the ECB. Is that where you're at, 375 pushing 4?
Well, put it this way. I adjusted our terminal rate assumption back in December to 350 for this year, but my presumption of 350 is proving to be increasingly challenged by virtue of these inflationary dynamics. So I think particularly if we do see, as I say, those core prices remaining relatively sticky, then I think the prospect of 375 or higher continues to build. And so accordingly, that underpins our structural bias for a higher valuation of euro-dollar through the course of the next 6 to 12 months. And so that's why we're looking for euro-dollar to be trading back into the low to mid-teens by the end of the year.
Wow, euro stronger right now, 106. Pushing 0.8% higher on euro-dollar. Jeremy, thank you, sir. Jeremy Stretch there of CIBC. The latest from Goldman then, looking for a terminal rate on the deposit rate of the ECB of 375. Lisa's friend, the Bank of France governor, was out a little bit earlier this morning. Did you see those comments?
Yes, I did.
I was waiting for you to bring them up. Turned around and said we need to get to the peak rate by September. just trying to work out what that peak rate will be.
I like that you said my friend rather than trying to say
And then I
his
said the
name.
Bank of France governor.
rather than trying to say Villeroy de Gallo. But
That is beautiful.
thank you. I always say it slightly differently. But there's a question about what that terminal rate is. If you want to get there by September, that means that March is not the last. And I think that is really instructive at a time where the rate is already higher than many people thought they could get to. And so you do wonder, especially with the peripheral spreads controlled, have we seen the worst of it in terms of being priced into the market?
Well, let's talk about the journey. So 50 basis points this month. That's what most people are looking for. That's what the ECB guided us towards. Goldman says another 50 basis points in May, Tom. And then in June, you have a lift to 375 rather.
I'm going to go bullet on you here. And what's interesting here is we're now talking about the speed to get there. And I would suggest September. I don't care what the central bank is. In central bank talk, September's basically tomorrow. And this is part of it. A lot of people talking about jump conditions that we're seeing right now in yields, and some of it's a gloom crew. But the answer is, all of a sudden, we're talking about getting there fast.
Meanwhile, ECB's Joachim Nagel saying he won't speculate on when the rate may be reached. So there you go.
She nailed
Seriously.
Nagel.
When the peak rate will be reached.
It's the same exact
Yeah.
issue. He doesn't want to basically double down on that.
I think he wants to
let alone
get
what
there
it is.
fast, given that he's from the Bundesbank.
And eliminate all bond buying and basically reverse
all
that.
All of the above.
Yeah, the balance sheet right
Okay.
away.
Next out, Mona Mahajan's going to weigh in on this from Edward Jones.
So much love.
Just kidding, this ECB talk, aren't we? Looking forward to that conversation a little bit later this morning. That's about 50 minutes away. Futures right now up 0.33%. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. In China, the economy is showing signs of a stronger rebound after COVID restrictions were abandoned. Manufacturing posted its biggest improvement in more than a decade last month. Meanwhile, services activity climbed and housing market stabilized. In northeastern Greece, at least 36 people have been killed in a train crash. 85 others have been injured. Authorities say a passenger train collided with a freight train just before midnight, starting a fire. The passenger train was traveling between two popular tourist destinations, Athens and Thessaloniki. Lori Lightfoot has become the first mayor of Chicago in 40 years to lose a bid for re-election. She finished third in Tuesday's election. An April 4th runoff will pit former Chicago Schools Chief Paul Vallis against Cook County Commissioner Brandon Johnson. Lightfoot was unable to overcome voter dissatisfaction with Chicago's rising crime and slow economic recovery. FBI Director Christopher Wray says the agency previously determined that the COVID virus most likely originated from a potential lab incident in Wuhan, China. Wray's comments to Fox News contradict scientific claims that the virus emerged naturally. He said the Chinese government has been trying to counter the work the U.S. is doing in that matter. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
When innovation strikes, Bloomberg Technology is there with the news and analysis you need. Every weekday, only on Bloomberg. The top names at the Fed are on Bloomberg.
Inflation's normalizing, but it's coming down slowly. I just think there's going to be a lot more inertia, a lot more persistence to inflation than maybe we'd all want. I'm hearing people still out there pushing price and trying to test where the levels of inelasticity really are. As the meetings go on this year, we'll see what happens. If inflation settles, maybe we don't go quite as far, but if inflation persists, maybe we'll have to do more.
Nobody covers the Fed like Bloomberg, your global business authority.
When I introduce my budget, you'll see that's going to invest in America, lower health costs, and protect and strengthen Social Security and Medicare while cutting the deficit more than $2 trillion over the next 10 years. But by the way, I want to make it clear, I'm going to raise some taxes. Many of you are billionaires out there. You're going to stop paying at 3%.
The President of the United States there on taxes in America. We'll pick up on that in just a second. Equity futures right now on the S&P, positive 1/3%. Yields not doing much as we kick off the month of March, 392.40. We'll get a read on German inflation in about 1 hour and 43 minutes from now. We'll break that down for you right here on Bloomberg. Then later, after that, 2 hours later, get a read on the ISM manufacturing survey for the month of February. That's really important. The month of January, just tremendous data, really surprised to the upside. We start to get a sneak peek, a look back at the month of February in the next couple of weeks. And we'll see, Tom, if that confirms.
Again, John, I wish for the British process. When does the campaign start for Prime Minister? Like 6 weeks before? 8 weeks before?
You mentioned this a lot. You don't like the 18-month
It's March 1st
marathon
of the year before. And we are knee-deep into it. I mean, it's for our international audience. Maybe it's not in the front of the newspapers, but it is in all the political rags. Amory Horton joins us right now, our Bloomberg, the Campaign is Forever correspondent. Amory, we just saw President Biden say, I will raise your taxes, or whatever he said. Perhaps there's a different candidate that would say, I'm not going to raise taxes. That would be the gentleman from Mar-a-Lago. President Trump making a splash here in the last couple of days, and particularly with strong polling against the GOP worthy. Is it for real?
Well, the strong polling is certainly numbers that are kind of eye-catching, especially since they show that he is in the lead, even when you have the likes of Governor Ron DeSantis picking up steam. So that polling from Fox News on Sunday found Trump receiving 43% support. DeSantis 28%. But what's even more interesting in the polls is that individuals who didn't pick, who picked former President Donald Trump to be their #1 candidate, their second choice was Ron DeSantis, and vice versa. So at this point, and Tom, the point you make about the UK system versus the US system, I'm very well aware of. This campaign season is obviously so long. You basically don't know the start or end to campaigns. It's just a rolling basis in the United States. So it is early on, but the former president still has a hold on this party. And it's CPAC this week. And we're going to be hearing from him and the likes of Nikki Haley, but notably Ron DeSantis won't be attending.
The CPAC crew, and let's be, you know, the 45% or whatever that are for the former president. Is there any belief he can marginally expand on that? I believe he has to get in the vicinity of 51% to be reelected. Is that within the zeitgeist right now that he can make that marginal pickup?
I think right now the playing field to the Republican Party is very wide, and it is only growing. I mean, the governor of Florida, Ron DeSantis, is being talked about a lot, right? And he has this new book, and he's on this national tour, and you know he hasn't said he's running, but he's holding events with a lot of really important donors in Trump's backyard at the Four Seasons in Mar-a-Lago. But at the same time, he has yet to even say he's running. So I think it's too early. It is way too soon.
And Marie, let's talk beyond just who's running and what the main issues are going to be. And we saw yesterday in Washington, D.C., China very much front and center with the Republican senator, the Republican representative, Mike Gallagher from Wisconsin, saying this about China. This is not a polite tennis match. This is an existential struggle over what life will look like in the 21st century, and the most fundamental freedoms are at stake. What types of proposals are behind some of the pretty fiery rhetoric?
Yeah, pretty fiery rhetoric, and also the optics of this, right? They're in the same room of the January 6th committee. They want to put on display really a show and talking about this threat of China and the decisions they're going to make now that will be important for America in the next 100 years. It is everything. I mean, yesterday we talked about TikTok. You had individuals yesterday talking about the Uyghurs. It is a slew of issues that this committee is going to bring for the forefront when it comes to China. But what really caught my eye, and I wrote it down to bring it to you guys, was at the same time this was happening, there was a report from the American Chamber of Commerce in China saying that for the first time in its 25-year history, fewer than half of respondents ranked China as a top 3 investment priority. That is huge, because what the trade data shows is that we are near records between the United States and China.
Which is the reason why there is this bifurcation between the near-term expectation for growth in China and the longer-term potential challenge, as we were talking about earlier, because there is this dissonance with what companies are doing now and what they say they are going to do. Does the U.S. want to encourage this, or do they want companies to take care of what they want to take care of?
I think what you see from U.S. politicians and the administrations is that they want to make sure companies are either going nearshoring or friendshoring and making sure they are diversifying outside of China. That really came to the forefront at the height of the pandemic, when everyone realized China had a hold of all of these goods that other countries needed to get access to and just couldn't. You see that with the president and the Commerce Department talking about, you know, the rules of the CHIPS Act, but they want companies to invest and manufacture here. So I think that's the tone that this administration and also Republicans and Democrats in Congress are taking when they talk to business leaders.
MH happening right now. The Chinese President Xi Jinping welcoming the Belarusian leader, Alexander Lukashenko, Putin ally, in China. And Xi's saying the following, that he wants to expand economic and trade cooperation with Belarus, according to CCTV. How complicated is this foreign policy effort of the United States with all of this in mind?
It is complicated. Xi Jinping, you know, he just had his top diplomat in Moscow meeting Putin, and now he's welcoming with a state visit with Lukashenko, who is Putin's really closest ally at the moment. Remember, 1 year ago today, Russian troops were in Belarus to help fight this offensive onto Kiev at the directive of President Putin. So what she really is doing is almost a proxy friendship to Russia via Lukashenko. Obviously, Belarus is a pretty small economy, but when it comes to trade, they have potash, which is incredibly important for China. That's one of their biggest trades. But this is really more about a olive branch to Putin by welcoming Lukashenko in the state visit.
MH, thank you. Down in Washington, as always, Anne-Marie on top of the story for you. This is how complicated things are right now. In the last couple of weeks, the administration in the United States has been very transparent about their concern that China would provide lethal aid to Russia. What's happened subsequently? China and Russia have described their relationship as, quote, rock solid. That's the Chinese description of the relationship with Russia. And then this morning, you've got Xi Jinping, the Chinese president, welcoming Putin's ally, Alexander Lukashenko.
The proxy friendship, as Anne-Marie put it, and the concern of that leading to a proxy war being fought in Ukraine. How much, though, are the lines hardening as a result of sort of where the gravity is pulling the two nations? If you look at what happened in Washington, D.C., it was pretty aggressive. This is our adversary in a massive way. China versus U.S. will define the next decade, and then you've got China coming out and looking for its allies to solidify them. So this is pretty concerning and a pretty landmark moment.
You know, I'm looking at this, and first of all, I have a proxy friendship with Anne-Marie. I mean, we can't stand each other, but it's a very proxy. We're very proxy. But what I want to know is, okay, Russia's sanctions, boy, are they easy. What do China's sanctions actually look like? Where's Dan Tannenbaum when we need him? I have no clue.
They've been super clear in the administration to say there would be consequences. They've been totally unclear about what those consequences might be.
What are those consequences?
Which is the reason why I ask, what's the meat behind some of the fiery rhetoric that we're hearing right now? Is there something more substantial other than, hey, companies, perhaps don't do as much investment there. I mean, really, is that basically the goal of some of this rhetoric?
So last year, maybe 18 months ago, do you remember that note from a bank that said China was almost uninvestable?
Yes.
Do you remember that? There was a bit of backtracking afterwards.
Yes.
Then we started the year and China was like, unavoidable, reopening, get in. And then the tensions had come back to the surface. What is it now? How do you allocate to that story, knowing that it's going to be a big feature of global growth this year, with these worries continuing to simmer?
So here's the question, right? We've always heard some of this rhetoric percolating on the outskirts. How much has become central enough for people to be concerned enough to trade on it in a way that they haven't really before?
We'll pick up on this story in the next hour with Anne-Marie once again. Coming up next, the next segment, Jennifer McKeown of Capital Economics, a direct friend of the programme. Equity futures up 1/3% on the S&P. Good morning.
We had a long-standing presence here in Houston for the past, I would say, 20-some years, since the Compaq merger. We bought a piece of land, we started building this building. And in doing so, we had to also recalibrate how we were building it because the pandemic hit us. And we thought about recreating a work environment that is very, very different, that is catered for this new structural way of working, which we call edge to office, where people don't always come to the office to work, can work remotely from their homes, their edges, but have to come back to the office for specific reasons, such as team meetings, customer meetings, and in general, collaboration.
With regards to the hybrid work model, do you see that as something that will persist longer term when the pandemic is long gone?
Yes, no question, this will persist.
News breaks. No one covers the world like Bloomberg.
6 people have died from these latest quakes, adding to the 41,000 plus people who've died in those major quakes 2 weeks ago.
A top Sam Bankman-Fried associate said to be nearing a plea deal.
How does that help build the case for the prosecutors against Sam Bankman-Fried?
Biden is here to say we will stay with Ukraine until the very end, and that's really a show of support as well for the allies.
Bloomberg, your global business authority.
Equity futures on the S&P shaping up as follows. A lift on the S&P 500 up 1/3. of 1%. The Nasdaq up 0.5%. Is that the Bond theme tune? Lisa watched her first James Bond movie 6 months ago. Won't stop talking about it.
Absolutely not true. Every time you talk about G-Force, I just think of that one, James Bond scene from Moonraker with. Okay, let's move on with Roger Moore.
No, tell us more. It's great. You're a big,
it's really
big Roger
terrible.
Moore fan.
The markets are amazing.
How about that bond market? Let's get to it. Your 2 year looks like this. On February 2nd, the day before the payrolls report, 4.03% on a US 2 year. Right now, 481.60. Yields unchanged on the session, not unchanged over the last month. Similar move on a 10 year, 391.43. Yields unchanged.